to Diana Olick now. Are the numbers I'm seeing on my screen correct here for the Dow? Are we up 840 points right now? Diana, I'm watching this literally glitching in gap. We're up 900 points. Is this, yeah, okay, there. Wow. Our charts can't even keep up with how quickly these numerical moves are happening. We are at session highs. Emily Wilkins in Washington with some breaking news. Emily, what's going on?
Hey, Kelly. Well, Treasury Secretary Scott Bessent was supposed to be meeting with a group of House Republicans, but he had to cancel at the last minute. And we've learned that it's because he was pulled into a meeting with President Trump. Now, we don't know the exact details, of course, what this meeting is on, but certainly a lot of discussion right now about tariffs, a lot of discussion about what's happening in the market, and also a good bit of discussion. Bessent has been on the Hill this week talking with lawmakers in part about the tax package that they have been working on. This is a key part of Trump's agenda. The House is set to take a major vote on it today, but at this point, they do not have the votes. There are a number of Republicans who are pointing to the fact that this could add trillions of dollars to the deficit through this package, and then pointing at the bond market and saying, hey, if we want to make sure that we are keeping the markets steady, consistent, we need to make sure that we are moving forward a package that is not going to add trillions of dollars to the national debt. And so going to be a very interesting day in Congress to kind of watch lawmakers move and see if this is going to actually be a point where Republicans start breaking with Trump over their concerns about the deficit. Guys?
This is one of the strangest market moments I've ever seen, where we're seeing the Dow and the other major averages spike higher so quickly that our charts literally can't keep up. The Dow is up 1,500 points right now. And the latest headline that I see on the news wires, right, is the president saying he's raising the China tariff to 125% effective immediately. Emily, that's obviously not what you're talking about, and we don't know where these reports are coming from. Not to mention reports on the news wires the last couple of days have led us in all sorts of crazy directions. So let's go back to what we do know, which is about this meeting between Trump and Bessent that was supposed to happen. Tell us again.
So Bessent was actually supposed to be meeting with lawmakers on a day that they're set to pass a very critical piece of legislation, and he had to cancel on lawmakers because he got pulled into a last-minute meeting with Trump. So certainly something seems to have happened at the White House where Trump says, hey, I need my Treasury Secretary right now. We don't have any more clarity on exactly what that is, though.
Let's go across town to our Washington bureau where Megan Casella. Well, wait a moment, Emily. Let me just back up as we wait to get our other reporters ready and find out exactly what's going on here. And just to rewind for the past couple of minutes, we came in this hour with the Dow up 200 or 300 points. We had a 10-year bond auction that everyone was nervous about after there appeared to be a bond buying strike in global markets overnight that pushed the 10-year yield up to almost 4.5%. That auction went well. That was the initial spike higher in the Dow, up about 500 points. We saw the 10-year fall to below 440, which is where it remains. That then saw markets continuing back to where they were pre-market. And just in the last couple of moments, the Dow has gone from up about 300 points to up 1,500 points, with very little explanation as to what's caused this sudden move, other than the canceled meeting Emily just told us about, with Bessent now being pulled in by the president to the White House. A couple of headlines from Trump on the wires about China tariffs. Megan Casella is in our D.C. bureau. Megan, maybe you can enlighten us with more.
Kelly, we are just sifting through everything that we're seeing in this Truth Social post, but two major developments. I'm going to go first that the president says he is authorizing a 90-day pause and substantially lowering the reciprocal tariff during this period of 10% effective immediately. There's some fuzzy language here. The upshot is that there's a 90-day pause in the reciprocal tariff. What I'm not clear on is whether we go to zero during that time or to back where we were, or if the 10% tariff remains in place. Either way, a major step forward. The president says that this is because more than 75 countries have called representatives of the United States. Negotiations are ongoing, and so he's instituting this 90-day pause in the meantime. On the other hand, some negative news on China, saying that based on the lack of respect that China has shown to the world's markets, he's raising the tariff on China to 125%. That's, of course, up from the 104% that took effect just at midnight, now going even higher to 125% because he does not like the way China has been retaliating rather than coming to the United States and wanting to negotiate. So two major step forwards here. One, obviously, very good for the markets. You're seeing the markets react to that. The other one on China, looking like, they don't like the lack of respect that they see. So we are looking at a world in which things continue to get worse with China, one of our largest trading partners, but of course not the largest, but getting much better with everybody else, at least temporarily, while these negotiations, Kelly, are ongoing.
Okay, so in a very simple nutshell, Megan, thank you. The president has just announced a 90-day pause, capital letters pause, and a substantially lowered reciprocal tariff during this period of 10% effective immediately. Now, this is a long run-on sentence in the Truth Social post, so let's try to unpack it. He starts by saying, based on the lack of respect China has shown, I'm raising the tariff there to 125% effective immediately. Mark doesn't really care about that part. He says at some point they'll realize ripping off the USA is not sustainable. Then he says conversely, and based on the fact that more than 75 countries have called representatives to discuss trade barriers, tariff, and so forth, and that these countries have not, at my strong suggestion, retaliated in any way, shape, or form, I have authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. Wow. This is a shocking turn of events here at about 1:25 Eastern time. The president, again, posting on Truth Social that for those trading partners who have not done reciprocal tariffs or retaliated in any way, he has authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%, also effective immediately. The Dow is up 2,100 points right now. The NASDAQ is up 7.8%. The S&P is up 6.3%. That 10-year auction is a distant memory at this point. In fact, 10-year yields remain a little bit lower, down around and under 4.4%. Scott Cronert is here with us. He's a U.S. equity strategist at Citi. Scott, your reaction?
Well, Kelly, this is what we were looking for when we sat down to plug in for this call. But clearly, the events are unfolding pretty quickly. So I think the market's been looking for President Trump to find an off-ramp down a negotiation path on tariffs. That's quite obvious. And that's been an overhang for some time on U.S. equities. I think to put some perspective on this, our work is that 4,700 in the S&P more or less prices in tariff risk. So and that was tariff risk as we presumed it yesterday. So what you have to do now is begin to allow for some alleviation of that stress. And obviously that's what you're seeing today. So this would be an as expected response in the discussion drama here, where you begin to see the president pull back from some of the stated tariff circumstance.
Scott, 5 minutes ago, we were talking about how the U.S. was going to kind of reassemble this new economic order, including what the implications were for treasuries and all the rest of it. Now, does it matter?
Yeah, I think it still matters, but I don't think to the same degree. Obviously, you've alleviated the pressure point here for now. And I think that discussion in terms of the global world financial order probably gets pushed back to the background for now. But again, as we've learned, things can change quickly. I think what we're looking at here in terms of the Secretary Bessent angle is that he's been a little bit more of the view that we get it. There's some tariff aspect here that makes sense, but let's not go overboard. You go back to where we started, Kelly. I mean, going into this year, we were modeling, okay, we're going to get a 10% across the board tariff that maybe gets negotiated down to 5%. That's a marginal impact on S&P 500 fundamentals. We can live with that because of all the other things going on with fundamental dynamics. So I think when you then went to 20%, much bigger issue, much bigger headwind for the S&P. You're alleviating some of that and putting us back to where we started, I think, a couple of months back.
And let's trace the events back to, was it just last Wednesday was Liberation Day, as the president called it, April 2nd, the announcement of what had been in the works for weeks, if not months, reciprocal tariffs. There was all of this surprise and concern about how those rates were actually calculated. A lot of surprise that they were as high as they were on certain partners like Vietnam, who had seemed to play ball, weren't necessarily the worst actors and so forth. We've heard days now of defense of this regime of basically saying we're trying to close the trade deficit, we're trying to reorder the U.S. economy, and all of this from all of the major cabinet advisors, all of them kind of trying to lay out this scenario. And now the president has backed down.
Well, look, I think when you looked at the Liberation Day statistics, I think Vietnam jumped out as like, there's an example of the math that they use to compute tariff rates predicated on trade deficits.
Right.
I'm going to say probably has some issues, right? Because it didn't take into account the reality, the underlying fundamental circumstance of the relationship with many of these countries, and Vietnam is the poster child for that. So I think the moment investors saw that, it's like, wait a minute here, something's just not right with the formula, with the approach, which I think precipitated a lot of the reaction Thursday, Friday, and again, the first part of this week.
Yeah.
I look at it from our perch. We went into Q2 getting more aggressive on the growth part of the market, when overweight tech, remain overweight comm services, on the view that at some point this is going to play through. That part of the market that got hit first is more likely to snap back quickest, and I think that's what we're seeing now unfold. So I think the playbook's changing quickly, and we've gone from a lot of uncertainty to alleviating some of that.
Yes, and we'll cycle through some of the Mag 7, the major cap names. And NVIDIA was higher even before all of this happened. But Scott, if you could hang tight for just a moment, let's get to Eamon Javers at the White House. Eamon, what an extraordinary turn of events. The Dow is still up about 1,900 points.
Kelly, no comment from the officials here at the White House on the president's decision, why he reversed course, who was with him at the time he did. I just spoke with somebody in the West Wing who was in the Oval Office moments ago. They're offering no color, no insight, no context here to the president's decision, just saying simply the truth speaks for itself. That is the Truth Social post that the president put up on social media. I can tell you that I was standing next to some lower level aides in the West Wing when this hit the wires. None of them were in a position to expect this, and all of them were surprised to see it. The president had given no indication that he was thinking about reversing course on the future of his tariff program. Obviously, he's bifurcating his response here. One response for China, one response for the rest of the world. They had told me here at the White House earlier today that there were more than 70 countries that had sought negotiations with the White House. The president suggesting in his report, in his post just now, that number is 75 nations. So clearly this is a sudden pivot and reversal by this White House, and aides here are not in a position right now to offer any kind of context or insight into why the president did what he did. What we do know is that there were reports off of Capitol Hill that Treasury Secretary Scott Bessent was set to meet with a number of Republicans on the Hill. That meeting was canceled. Bessent was said to be headed to a meeting at the White House. Presumably that has something to do with this. We haven't quite connected those dots just yet, though, Kelly, to know exactly who was in the Oval Office with the president at the time that the president made this decision. I'm just checking to make sure that there's a Marine at the West Wing door here to indicate that the president is indeed in the West Wing, and that is the case. So the president is here. We don't know who's in the Oval Office with him, and we don't know why he made this decision, Kelly.
The NASDAQ is up about 8%. Apple is up 10%. Eamon, and again, going back, there were not any conditions attached to this either. In the post, the president says, those countries that have not retaliated in any way, I have authorized a 90-day pause, but there's really no strings attached here. So even as we all thought going to use these negotiations as a way of winning certain, maybe it's investment dollars, maybe it is lower tariffs or non-tariff barriers, what have you. Now all of a sudden, this appears to be saying, well, that pressure is off of those countries to put those concessions on the table.
Right. So the question is, if these tariffs were the thing driving them to the table, as you point out, why take them off now if they're already at the table and you've got the pressure succeeding and the sense of urgency on the other side? The market was up today, leading into this, but you also had this dynamic of the Treasury market and bond yields spiking overnight, and real concerns about what that meant for the future of the U.S. economy. So it may be that the president decided that enough is enough here in terms of economic pain. He's got people at the table, and he's prepared to declare victory.
Eamon, stay there if you would. Eamon Javers, we just want to go to Steve Kovac, who's watching this 10% snapback in Apple, Steve, which, by the way, doesn't retrace the 30% it's down year to date. But this and Nike, which is up 8%. These are kind of the poster children of the China supply chain. Now, the China tariff goes up, Steve, interestingly enough,
Right.
but the market is perceiving this as, hey, at least there's relief in other parts of the supply chain, like in India, I'm sure that they can lean on.
Right, there's relief there, and then India is the perfect example there, Kelly. India got hit with those 26% tariffs, and we've been talking, you and I have been talking about this for years, how India has become this offloading of supply manufacturing for Apple Apple to build those iPhones. They keep increasing the amount of iPhones they build there every year. I would fully expect now, if these new tariffs stick, for Apple to shift even more production over to India because of that 10% rate. Also, Vietnam. Vietnam is a hugely important manufacturing center increasingly, and Malaysia for Apple. Vietnam, of course, I think it had something in the 40% range there, and they make a lot of the accessories there. That means Apple Watch, that means AirPods and things of that nature. But China, still the sticking point here with, what is it, 124-25% tariffs on China. That still puts a huge burden on the iPhone business. Remember, Kelly, between 80 and 90% of all iPhones are still made in China. So even if every single iPhone that they make in India gets shipped over to the United States at that 10% tariff rate, that's still not going to be enough to fulfill the demand that we have here in the United States. It is a relief. There's no doubt about it. That's why we're seeing the spike in shares here on Apple, but still a lot of work to be done here on the China front because they're so heavily dependent on China for the production of iPhones, for the production of many of their products. We are seeing diversification in Vietnam, Malaysia, and India, but still so much of the focus is going to be on China. And it's not just about the stuff being made in China and imported to the United States, Kelly. You got to remember, as this trade war heats up, we know China has this appetite for retaliatory measures. So we'll see what happens, what kind of screws it can turn on Apple as this trade war heats up just between these two countries.
Steve, appreciate it. Steve Kovac, Dow's up 2,600 points. The NASDAQ Composite is up 9.6%. Megan Casella has more. Megan, some comments from Lutnick.
Absolutely, a little bit more color, Kelly, that we're getting from the Commerce Secretary posting on X, saying that he and the Treasury Secretary, Scott Bessent, who we know had just canceled that meeting with members of Congress, sat with the president while he wrote one of the most extraordinary truth posts of his presidency, referring, of course, to the 90-day pause. Lutnick goes on to say the world is ready to work with President Trump to fix global trade, and China has chosen the opposite direction. So again, suggesting a little bit there what they are looking at here. More than 75 nations, they say, have reached out to the U.S. just in the last week to try to negotiate on these tariffs, vowing not to retaliate, vowing to work together. And of course, they're very angry with Beijing for taking the opposite tack, vowing this retaliation. So far, everybody else, it seems like, is getting this 90-day pause. My read is that the 10% baseline tariff would stay in effect during this pause while the China gets the higher tariff. I also would just say, Kelly, that we do have to see some paperwork before this higher tariff on China could go into effect. The president would have to sign something on this.
Speaking at the White House, let's see if we can dip in.
The president just put out a statement announcing an additional tariff on China. The tariff on China will now go up to 125%. Because China imprudently decided to retaliate against the United States. And as I said at the podium yesterday, when you punch at the United States of America, President Trump is going to punch back harder. In that same vein, we have had more than 75 countries from around the world reach out to President Trump and his team here at the White House to negotiate better trade deals for the American worker. We have been overwhelmed with the amount of requests from countries around the world. I'll let the Secretary speak to that. We will continue with the tailor-made negotiations that I spoke about yesterday. In the meantime, there will be a 90-day pause on the reciprocal tariffs as these negotiations are ongoing, and the tariff level will be brought down to a universal 10% tariff. The Secretary here has been a huge part of the President's trade team, of course, and will continue to lead these negotiations moving forward to look out for the American worker, which is always President Trump's goal. So I'll kick it over to our great Treasury Secretary, Scott Bessent.
Good, thank you. And we saw the successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as I told everyone a week ago, they're in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
Go ahead.
Secretary, thank you for doing this. Let me ask you three quick things, if I could, just for the sake of clarity, because the markets are open and they're wondering. First of all, Mexico and China, are they part of this 10% universal?
Well, China,
Mexico and Canada, are they part of the 10%?
Yes.
Okay. Second, given then that you have the rest of the world essentially calling it, it's not China, is this now just all about China?
Well, it's about bad actors. And what we will see is some of the very early countries are China's neighbors. That we're going to see. I'm seeing Vietnam today. Japan's at the front of the queue. South Korea, India. So we will see. And as I've repeatedly said, and President Trump has been saying it for years, China is the most imbalanced economy in the history of the modern world, and they are the biggest source of the U.S. trade problems. And indeed, they are problems for the rest of the world, because what we've seen is that as the U.S. announced a tariff wall last week, many of those goods have already started flooding into Europe.
So as you see it now, this trade war is China versus the rest of the world.
Well, I'm not calling it a trade war, but I am saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners.
And if I could just, excuse me, Raquel, if I could just add to what the Secretary said. Many of you in the media clearly missed the art of the deal. You clearly failed to see what President Trump is doing here. You tried to say that the rest of the world would be moved closer to China when in fact we've seen the opposite effect. The entire world is calling the United States of America, not China, because they need our markets, they need our consumers, and they need this president in the Oval Office to talk to them. And that's exactly why more than 75 countries have called, because the United States of America is the best place in the world to do business. And as the president has shown great courage, as the secretary has said, in choosing to retaliate against China even higher. Elena, go ahead.
Hi, thank you, Treasury Secretary Bessent. Can you explain more of the decision making on what feels like a reversal here? I mean, just these went into effect less than 15 hours ago, these tariffs. Why the pause now? What led to that?
No, again, President Trump created maximum negotiating leverage for himself, and which tariffs went into effect 15 hours ago? The ones that we have lowered went into effect a week ago. They were announced a week ago, and we have just been overwhelmed by the response from mostly our allies who want to come and negotiate in good faith. So we are expecting them to come with their best deal. As I said a week ago today, don't retaliate, hold your ground, let's see what happens. And China, they kept escalating, and now they have 125% tariffs that will be effective immediately.
Mr. Secretary,
Go ahead.
Mr. Secretary, thanks so much for doing this. The 90-day pause on the reciprocal tariffs, is that because of the whiplash that we've been seeing across the financial markets? How much was what we saw in the stock markets, a part of this decision?
No, it's because because of the large number of inbounds. We've had more than 75 countries contact us, and I imagine after today there will be more. So it is just a processing problem. Each one of these solutions is going to be bespoke. It is going to take some time, and President Trump wants to be personally involved. So that's why we're getting the 90-day pause.
Mr. Secretary, there was a tweet that you and Secretary Lutnick were in the Oval Office with the president talking about this. Can you talk about what that conversation was like and what you guys said to one another that led to the decision?
Look, it's all the president's decision, and the president had a level in mind to raise the China tariffs, and then he had the 3-month, essentially the 3-month pause in mind, and we were discussing the exact wording. Sorry? Of course.
It's the president's decision.
It's the president's decision. It was the president's decision to wait until today. And again, as I've said in the past, no one creates leverage for himself like President Trump.
Mr. Secretary. Shelby, go ahead.
Mr. Secretary, what does the president want to see by this, I think it's July 9th deadline to keep things paused? Is it just trade barriers coming down, or is it more than that?
These are trade negotiations, but if countries want to come and offer other things, I talked about yesterday that we are thinking about a big LNG project in Alaska that South Korea, Japan, Taiwan are interested in financing and taking a substantial portion of the offtake. But again, in essence, that is trade because it will decrease the trade deficit that we have with those countries. So everything's on the table.
Mr. President.
Raquel, go ahead.
Secretary, a clarification on the pause. What happened to those countries who just had 10% baseline tariffs, like Brazil and others? Are they still going to have this 90-day pause? Because you were saying that there will be a tariff of 10% for others. So what happened to those who just had a 10%?
Yeah, that's going to remain.
Mr. Secretary. And do you call this an embargo to China?
Pardon?
You call this an embargo to China, a trade embargo?
Well, I'm not sure what you mean by the word embargo.
125% tariffs, like those, and then you impose 84%. Isn't this an embargo?
Well, it's not. Look, it's China's decision that we have the deficit with them. They sell us almost 5 times what we sell them. So again, I think it's an own goal by China.
Mr. Secretary, Mr. Secretary, with this, does it signal that you're confident that you're going to be able to strike a satisfactory deal with all these 75 nations that approach you?
It signals that President Trump cares about trade and that we want to negotiate in good faith. And as I said, each one of these is going to be a separate, bespoke negotiation. So we are confident that having seen the other side of where this could go, and it was like I said last week, the market didn't understand. Those were maximum levels. The countries can think about those levels as they come to us to bring down their tariffs, their non-tariff trade barriers. We're going to discuss currency manipulation, subsidy of labor, and industry.
Secretary, as far as you, will the pause also apply to the sectoral tariffs that the president has announced, pharma, lumber, anything else?
No, it's on the reciprocal.
So those will still be coming here soon, right? Mr. Secretary, as far as the negotiations with the 75
Andrea, go ahead.
Mr. Secretary, so I want to ask you about what you're doing here. So the market is reacting crazily, right?
I haven't seen it.
Do you think that this move is going to change and calm down the market reaction?
What?
Do you think the markets have tanked, right? There's been a lot of volatility in the market, not just in terms of stock markets, but also public bonds. So will this move in your mind, do you anticipate that this is going to calm the markets down?
Well, I think what we've seen, I think the willingness by more than 75 countries to come and negotiate, I think now the market understands that everything they saw last Wednesday was a ceiling, and now we have a 10% temporary floor, and I think the market, my 35 years in the market, I always wanted certainty, so I think we've got more certainty.
But Mr. Secretary,
Maggie, go ahead.
Mr. Secretary, why do people assume this is the last word? The president began this morning saying, be cool. 5 hours later, he announces a new policy. Why will investors in the market assume that this is it?
Because, again, as I said, we've given 90 days, and the only certainty we can provide is that the U.S. is going to negotiate in good faith, and we assume that our allies will too. And in terms of certainty, we will see what China does. But what I'm certain of is that what China is doing will affect their economy much more than it will ours, because they have an export-driven, flood the world with cheap export models, and the rest of the world now understands, because when we put up our tariff wall, those exports were already flowing to the rest of the G7 and to the global south.
And you think
Mr. Secretary, how much of this decision was driven by the bond market cratering overnight? What is happening with bonds? Is China selling their bonds?
I have nothing that says that, and we actually had quite a good 10-year auction today, and all this was, again, this was driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along, and that, you might even say that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors, and we are willing to cooperate with our allies and with our trading partners who did not retaliate. It wasn't a hard message. don't retaliate, things will turn out well.
What's your message to
There's political articles saying that the countries were getting
these
calls back.
negotiations with these 75 countries, how long will that take? Will it be a matter of weeks? Will it be a matter of months? Do you expect financial markets to be stable during that time period?
Well, we've started with a 90-day pause, and we will see if more countries turn up, what will happen. But we have a meeting with Vietnam today, and we have one of the largest trade deficits with them, so I'm hoping it will move in a good direction. I was at the Japanese ambassador's house last night for the Cherry Blossom Festival, which is quite festive, and he and I had a good chat. They are going to send a deal team over. So we'll see. These are complicated negotiations. These are imbalances that have taken decades to create. But I think having seen the maximum level that Donald Trump is willing to go to, President Trump has created this negotiating leverage.
Excuse me, everybody. Excuse me. The secretary is obviously a very busy man, as he has said. He's had more than 75 countries that the trade team has to respond to. I'd just like to end with this. For decades, Republicans and Democrats have said that these unfair trade practices are ripping off the American people, are ripping off our country, but nobody has ever done anything to address it. We finally have a president here at the White House who is playing the long game, who is doing what is right for the American worker and our industries here at home, and he has put together a fantastic team in Secretary Bessent, Secretary Lutnick, the entire trade team who will be focusing on negotiating these good deals to put the American workers first, and we're going to get to work to do that. Thank you.
What about the EU? What about the EU? They retaliated this morning. Why aren't they being treated like China?
Secretary Bessent at an impromptu press conference at the White House with the press secretary, Caroline Leavitt, moments after the president announced on Truth Social that he will be winding or repealing or putting on pause the reciprocal tariffs, but leaving in place the 10% tariffs for now and ratcheting up tariffs on China. Eamon Javers is standing by at the White House. And Eamon, after a series of events like what we've seen, I think when people absorb the China tariffs still being into effect, they're still going to have to think through both the inflation, the growth aspects of that, the supply chain hit. But this is a huge about-face, a huge reaction in the markets. Perhaps it was the bond market, as the Treasury Secretary was asked about, that got the White House's attention after the sell-off we saw overnight. But regardless, what an extraordinary moment here.
Absolutely, Kelly, and I can tell you that nobody that I talked to in the West Wing today expected this. If this was the strategy all along, it was very tightly held in a very close circle of people. You heard the Treasury Secretary there say that he had a conversation with President Trump back on Sunday in which the president indicated that it was his strategy to let the tariffs go into place on Wednesday today and then announce this 90-day pause. Now, that indicates that they've been holding this secret for several days from the entire world. The Treasury Secretary also said that there's no way in which the bond market meltdown overnight affected this. He said we had a very good 10-year auction and the bond market was not part of the concern, but the bond market meltdown certainly did get the attention of the world, Kelly. And I can tell you that what I'm looking at here is some of the palace intrigue of this announcement, right? Because it's unexpected, very sudden, but also who was at that microphone and who wasn't at that microphone. You saw the press secretary there, and you saw the Treasury Secretary there. The person we didn't see is Peter Navarro, who's one of the architects of the tariff strategy. We also didn't see Howard Lutnick, who's the Commerce Secretary, who's involved in a lot of White House meetings. Lutnick putting out a post on social media suggesting that he was in the room for this decision, but was not clearly asked by the president to go out to the microphones to explain it. That fell to Bessent, and we know that Bessent is the person who has been saying all along that this is a negotiation, that the president is open to talking with foreign trade competitors, and that Lutnick and Peter Navarro were the folks who were saying this is not a negotiation, this is all about a permanent regime change in global trade. So it looks like, to the extent there are factions inside this White House, this is the triumph of the Bessent faction, and the Peter Navarro faction is a little bit on the run here at the White House.
Eamon, appreciate it. With the Dow up 2,100 points, the NASDAQ at the highs was up almost 10%. Let's bring in Steve Leisman. Steve, because we were talking a moment ago about how complicated things are for the Fed. If this is telling us that growth is going to hang in there in the meantime, I guess it makes things a little easier for them. But we're also seeing the odds of a cut at the next meeting go up to almost 90%?
at the next meeting. That's not what I have. At the June meeting, I have.
June, thank you.
For the May meeting, it went down to 20%. It went down a little bit for the June meeting. I mean, look, you can say this is a relief, but there's another 90 days of uncertainty to come, which is worth it. And you could also try to spin this as a victory, or you could see this as a failure of policy and leadership on the part of the White House, Kelly, in the following way. I remember the night before the tariffs were imposed and the day and that day, and I asked our great White House reporter, Megan Casella, why we had heard nothing of the plan. And the reason I asked is it because they don't know or they're not saying? And what we found out since is they didn't know. The plan was made up that day. It was not nobody on Wall Street. They didn't run it by Wall Street. They didn't run it by business leaders and CEOs. And now you could argue, after withering punishment from markets, from bond markets, trillions lost across the globe, the president, he didn't just flinch, but he ducked when it came to what was coming his way here. So they can try to spin this as a victory, and maybe they have 75 calls. Maybe they get 75 trade deals. But it just seems to me that the other way to tell this story is that the president just flinched and did not run this by the markets, run this by the business, and he was facing a deep recession. I will point out there are still trillions lost from that day, Kelly. There's still quite a bit that's been lost here in terms of where we were just on April 3rd. We're still down, way down. These 10% tariffs, the market doesn't like these either. We didn't get that back yet.
Let's bring in Citi's Scott Cronert on that note. Steve, thanks. And Scott, I was just looking at some of the same charts Steve is referencing. So on the NASDAQ, you know, we were up at 20,000. We're still, you know, call it 15, the numbers are moving so quickly. Several thousand points off the high, 16,591. The S&P, same story. I mean, these were the 52-week highs when everyone was screaming that things were overvalued and frothy. We've seen a dramatic snapback today. What happens now?
Well, I still think that that's where the momentum is. I'm going to kind of stick with our guns here, that I think our focus on tech and the growth parts of the market, whether you get there via this means or whether you get there by traditionally where you get when you shift to early cycle, I think the growth part of the market is where the action is going to be most notably right now. I would say, in response to what Steve's point was, I mean, I'm glad to see Bessent's reassertion, if you will, into the process. I think that's been something notable. And then I just remind so many times over the years, you know, you're looking at a policy issue, and often it's not the what of the policy as much as it is the how. And the how is what had, I think, much of the investment community disgruntled. And I think what we're seeing now is a clear path towards negotiation, which is where we thought we were going to get to anyway. And so I think clearly you got relief rally right now. Doesn't mean we're out of the woods, but I still think worst case now off the table, and we're back to a little bit more, let's call it centered focus on where policy goes from here.
All right, Scott, appreciate you sticking around for us this hour. It's been a one for the ages. We appreciate it. Let's turn to Jeff Kilberg now, who's founder and CEO of KKM Financial. Jeff, making some trades as we speak. Scott just mentioned looking to growth, looking to early cycle. That's usually things like you've got your shades on. Do tell.
He said, "Be cool, Kelly." He said, "Be cool."
Is that what the president said? That's right. That was what
That's
this morning.
That's what the president said this morning.
Yeah.
What velocity! This is sensational. And we talked about, is it different this time? And it certainly felt different, Kelly. We saw the bond market really maybe be that straw that broke the camel's back, being President Trump wanting to make a deal. But the fact that he's pivoting, spinning this, he is going to claim victory. And right now, I know we're still about 7% away from just last Wednesday in the S&P 500. We are seeing this possibly be a victory, with all these details still to come out in the next 90 days. But right now, the underinvested, the people that were really concerned, all the 4,000, 20% Black Monday calls, those are off to the sideline for now.
Jeff, and by the way, as we pointed out Thursday and Friday, to see 2 4% down days in a row is one of the most unique things that's happened in recent decades. It's almost always been a buying signal on a 6, 9, 12-month basis. So we had priced in a lot. What happens when the dust settles and we realize, okay, 125% tariff on China still in effect? Still kind of if you had thrown everything else out this year and only knew that, you'd think, well, that's probably going to be a headwind for stocks in the economy.
Well, I think it's pretty strategic the way we're going to essentially pit about 70 to 90 different countries against China. So hopefully they find a way. I know President Trump talked about being gracious. We just want a fair deal, but we do have to level that playing field. But put China to the side, I think we are going to be okay for earnings season. We're going to have to measure, Kelly, how much damage was done in the last 4 or 5 trading sessions because confidence was shaken. But if this was all part of the deal, art of the deal for President Trump, he had a lot of us fooled because it actually felt different this time. But once again, when you see the VIX go above 60, that seemingly, I know we're not out of the woods by any means, Kelly, it's been 30 minutes, but seemingly when the VIX goes above 60, that's the time to buy equity, specifically the NASDAQ 100. It was the beaten up stocks, those Mag 7 stocks that are just racing higher today.
Yeah, and you had told us that to watch 40 and watch those levels. Jeff, appreciate you joining us. Put the shades back on, and we'll check back in soon.
Be cool.
Jeff Kilberg. And that's it for us on an hour that won't be forgotten soon. Thanks for watching The Exchange. We'll pick up coverage on Power Lunch. Over to Brian Sullivan now.
And we'll give Kelly a couple seconds to get over here as well, because we are going to start with a market that is absolutely ripping higher. What is this? The face-ripping rally that some have talked about? The NASDAQ 100, that is not a misprint. The NASDAQ is up 9%. The NASDAQ 100 is up 10%. The Dow Jones Industrial Average is up 2,600 points. The 10-year bond yield at 4.38%. So what exactly just happened? Well, the market was fluctuating all day long. This morning, and maybe we should have listened to him, President Trump putting out on his social media feed that we need to basically chill out and buy the stock market. Well, guess what? About an hour ago, the headlines came crossing that there is indeed going to be a 90-day pause on some, not all, tariffs. And that pause, this one's real. Remember, we had the pause head fake earlier in the week. This one is real. That sent the markets ripping higher. That pause, though, it's critical to note, not on China. So again, folks, that is not a misprint. You do not need to rub your eyes, and let's hope you have not been drinking at this hour, but unless you're around the world, I guess, but we are seeing the market soaring right now. What about the travel names? They're popping as well. All the Mag 7, the Apples, the Nvidias, the stocks that got absolutely hammered, they're the ones that have come rip-roaring back. They're up more than 10% in some names. The chip stocks, they were market leaders prior to all this tariff conversation. Well, again, AMD, Intel, Microchip Technologies, these are also names that are all soaring. It has been I would say quite the day, but it's been quite the week. So let us get back now to talk about these tariffs. We got Megan Casella is in D.C. We got a full guest panel. We got Steve in D.C. as well. But Megan Casella, I want to go to you first because we got this 90-day pause head fake earlier in the week. It appears that Scott Bessent got what he wanted maybe. This is real, and the markets are reacting.
This is real, Brian, and this is really a major step forward with some caveats that I'll get to. But for now, you can see the market reaction, and rightly so. As you mentioned, it's down to a universal 10% baseline tariff that does remain in place on everyone, but all of those country-specific tariff rates as high as 49% on some trading partners, those are now on pause because of the ongoing negotiations. Treasury Secretary Scott Bessent just told us that more than 75 nations have reached out to the U.S. over the past week. The president wants to be involved in each of those, and while they're ongoing, they're putting everything else on pause, except, of course, with China, where they're not happy about the retaliation, and that's why that tariff, they say, will hike up to 125%. We'll keep an eye out for paperwork making that official, but we would expect that to come in the next few hours. Just a couple of other headlines from the Treasury Secretary. He insisted this was the president's decision, that it was not because of the market reaction. He said it was instead because, again, of those negotiations and the countries reaching out. He said also that the market understands that everything that came out over the past week, that was the ceiling, he says, on tariffs, and that now we're back to the floor, which for now is 10%. I'll say, Brian, though, the caveats that I mentioned, yes, this is a very good step forward, and we are in a much better place than we were an hour ago, but we still have a universal baseline 10% tariff. We still have an exceedingly steep 125% tariff against China, and now we have another 90 days of uncertainty, Brian, so still a lot more to come as each of these negotiations goes, as Bessent says, country by country.
Yeah, Bessent appears for now to be the winner. Peter Navarro may be the loser as well. Investors, at least for one day, today, still down. but maybe winners. All right, we got a big panel to sort of kick all this off. Kelly has made her way to the set as well. We got Francis Donald, chief economist at RBC Capital Markets, David Waddell, and Associate CEO. We're joined also in D.C. by Steve Leisman, who is there to do the Fed minutes. But Steve, this news, I think, pardon the pun, trumping the Fed minutes, at least for now. Rick Santelli's in Chicago, and Eamon Javers, who is at the White House. And Eamon, you were the one on Monday that sort of squashed this 90-day tariff talk by actually, picking up the phone and calling the White House. You moved markets on that. As you heard from Megyn, this one is real. It appears to be a wholesale change, at least for 3 months, by the president. And I think, and please, if I'm wrong, tell me, this is a big win for the Scott Bessent wing of the White House.
Yeah, that's exactly right, Brian. I can tell you I was in the West Wing when this social media post landed by the president, and it was a bit of a quiet afternoon until that moment. And then suddenly everybody's phones and screens lit up with this post. It's a long post, so as people were reading it, it took a moment to digest exactly what the president was saying. And there was real surprise in the West Wing, at least among the people I was standing with, that this had happened. Now, those are not necessarily the people who would be in on the highest level conversations, to be sure. And what we just heard from the Treasury Secretary, Scott Bessent, is that this was a strategy that dates back to Sunday night. He said he was with the president on Sunday night. Remember, Bessent traveled to Florida, traveled back with him after his weekend in Florida, and was here spotted on the colonnade by reporters on Sunday evening. Bessent says that's around the time when he spoke to Trump, and they came up with a strategy of letting the tariffs go into effect and then putting a pause into place. So this has been a closely held secret, if that's the case, here at the White House for some days right now, as the entire world was reacting to the president's tariff policy. The president knew at all times that he was going to do this, according to the version that we just heard from Scott Bessent. He also laid out sort of the rationale for this. Here's what he said.
I think what we've seen, I think the willingness by more than 75 countries to come and negotiate, I think now the market understands that everything they saw last Wednesday was a ceiling, and now we have a 10%, the temporary floor. And I think the market, my 35 years in the market, I always wanted certainty, so I think we've got more certainty.
So, Brian, you see this relief rally happening in markets now since this post went up on social media, and you heard the Treasury Secretary there talking about the idea of getting more certainty. But the scenario he's laying out is, not entirely certain, right? Because what you're looking at now is 75 separate trade negotiations with what they say are 75 different countries. He said each one of these negotiations will be bespoke. The president wants to be involved individually in each one of these negotiations, and so that means there could be 75 different outcomes in terms of trade with individual countries around the world. And that sets up a future over the next 90 days where we could be getting announcements, status updates, and the like on as we go along here on all of those different negotiations. So for people in the global marketplace, that's going to be tricky to follow, and there's going to be a lot of ups and downs between here and there, Brian.
Eamon, appreciate it. Don't go too far. Eamon Javers at the White House, where stocks, the Nasdaq's up almost 10%. We have individual parts like the airlines are up 20%, Robinhood's up 20%. Some of the retailers are up 20%. Absolutely levitating here. Let's turn to Francis and David for some context. And Francis, maybe you can take it first. But what do you think is going to be the net impact as the dust settles from the announcements we've had, the market reaction, and now trying to still figure out the economic effect of 125% tariffs on China?
Well, look, the economist game in the past few weeks hasn't been point forecasts, it's been scenarios. And when you ran those scenarios, when you saw something like Liberation Day, 20% average import, that was really consistent with a recession in the United States and some pretty high inflation. But we also ran a 10% across the board. That's not exactly what we have here, but it gives you a framework. And what you see in a 10% across the board, well, it's still problematic for growth and it's still higher for inflation, but it's not that same sort of deeper formal recession type of call. So some relief, I think, in a lot of economists' forecasts right here. But I have to tell you, Kelly, if you had told us last week that we were going to have a 10% across the board tariff wall around the United States, that still would have been a painful impact to growth. It still would have been material downgrades, a lot of inflation. I also have to say 90-day pauses are not an eradication of tariff risk. So companies are still going to be looking at uncertainty, and a lot of companies around the world waiting for what their individual negotiations will mean for the United States as well. Underlying all of this, we've still had stock market volatility that might impact sentiment and some consumer behaviors as well. So it feels a little bit of a relief here, but I have to say 10% tariff is still a massive reordering of U.S. trade and global trade, and certainly is not an eradication of the risks that we had seen in the past week.
David, I've heard some sort of theorize, and there's going to be many theories about all of this, but that one of the president's rationales here may be to get the budget deal done, right? They have a very slim majority in Congress with the House. They have vulnerable Republicans running for re-election. They're up against a constituency who's clearly alarmed about some of these new policies. Does that give them just enough breathing room to get that across the board, and at least maybe then provide some ballast if they do come back to this policy, and who knows if they will at this point?
Well, obviously the tax cut's a huge deal, and we need that to occur. Whether you can use the tariff revenues to offset in the budget reconciliation
I don't mean
process,
specifically.
I
just
don't know,
mean in terms of political.
Well, yeah, well, majorities have their privileges, right? And so the Republicans can use that at least as a talking point. I think two major things were revealed to us in the last 15 minutes. One, Bessent does not like a 4.5% 10-year Treasury yield. Like, I'm sure at midnight he was sweating that, and that's probably what walked into the Oval Office and said, we've got to make a change.
She wants lower.
Yes.
Much lower. Yeah. I tweeted out this morning, and it wasn't like me just tweeting my feelings. The market was screaming for change. Yeah. The market was going to push for change, David, no matter what.
Correct.
And when you see stocks move and bond yields move in the same direction, that was the leverage that Bessent needed to convince the president that Navarro was wrong.
That's what I think happened. And I think he walked into the Oval Office and said, we can't fund this thing at all if we're going to have these come on board. Because what, $600 billion comes into the United States from foreign purchasers. They own $8.5 trillion in treasuries. If they go on a buyer's strike, then we just start having these yields levitate, and none of this stuff happens. So I think that was the panic button. Number two, China's the problem, right? I mean, if you look at China's share of global manufacturing over the last 20 years, it's really come out of the U.S., but it's also come out of Japan. It's also come out of Europe. And so we know that the 10-year is the leverage to get the deal done. We also know that China is the main focus of all of these negotiations, and rightfully so. So I think those are two huge bits of information in what had been a huge information vacuum.
Steve Leishman in Washington, D.C. Steve, I know you were there to cover the Fed minutes. The Fed minutes are out, but obviously this is kind of superseding a lot of that. The Fed is looking at all this data, and kind of to Francis's point at the top of the show, it appears that the data now, tomorrow and the next day, will be different than the data we would have gotten earlier this morning or yesterday. How hard does this make an already nearly impossible Fed's job?
Can I say more nearly impossible? Is that a good answer?
I think that's correct grammarly.
I mean, not a laughing matter. Obviously, this is good news that the president backed off these tariffs. It's bad news, as one of your earlier guests said, that these 10% tariffs. Remember, Brian, we were down trillions of dollars on the S&P going into that Rose Garden announcement because the market hated the tariffs. And it's interesting to think where the market would have priced that day had the president announced just 10% across the board tariffs. Remember, that makes us one of the most highly tariffed countries or the highest tariffs in the developed world, higher than Europe. And of course, the president, as we know, made up those tariffs. And now he's increasing the Chinese tariff that he made up that they charge us, which is obviously a separate issue. But let's talk about.
But it's not, because Steve, as I understand it, and by the way, please, if anybody out there knows that I'm wrong, let me know, because Kelly, I'm just winging it here. The China tariff, as I understand it, is still there. I think the comment was the pause will be on tariffs for countries that don't reciprocate, but the EU just reciprocated. So I don't know.
Steel and aluminum.
The steel and aluminum, I don't know.
That's where I was going to go, Brian, because here's the question I have. If you're an investor right now, if you're a business person, what probability do you put on the idea that tomorrow there could be another tweet or another tweet after that? I think that business would feel as, let me give you an example. I broke a story this morning that the Treasury was meeting with Wall Street former Fed and Treasury officials to discuss the idea of a sovereign wealth fund. That's a process by which you can come to a policy that then can be understood by Wall Street. There was no such process in the tariffs here. He made up the tariffs on the day of the tariffs, or maybe the night before. And so you still live with this fear that over the course of the next 90 days, it comes back, the tariffs come back, you still have this 10% tariff. Look, things are a whole lot better than they were with these other tariffs that were in place. But you just have to be careful. You will forever have this idea of the policy that can come on at any moment with any tweet, unless that process changes and somebody like Scott Bessent were to get control of the policy process in a way that is understandable and predictable. Do what you want, Mr. President. Just let us know that you thought about it. Yeah, and it's the right policy, and it's going to stick around for a while, so they can figure it out and invest on it.
And I know we have Rick there as well. Rick, I'm not leaving you hanging, but I got to go back to Francis on Steve's point. I think Steve makes a great point as usual, Francis. Your job is not, you're not making political sides. You're there to model, as you said earlier. I'm there to model what I think is going to happen. Bessent said, well, we're going to get more certainty. Businesses hate uncertainty. He's right about that. I don't know if he's right about the more certainty now. As an economist, you're modeling. Does a 90-day anything give you a certainty in modeling? My physicist friends would say no, but they're crazy.
Well, we can put a number in an Excel spreadsheet and now start it 90 days later. But what it does is it reduces the probability of the most severe scenarios. And I think the most important thing that I heard in the last hour was when Bessent said 10% is now the floor. We told you the prior situation was the ceiling, but this is the floor. So when you're modeling these types of exercises, you're now putting a different probability on these types of scenarios. Now, it's imperfect, and that's why you have to be transparent and have a lot of humility and understand the upsides and downside risks. Uncertainty is the biggest unmodelable downside risk to any economist's forecast. We don't always know how it permeates through the system. We know higher income household Americans and CEO uncertainty is probably more problematic for the economy than lower and middle. But also, Brian, I've never had this level of uncertainty related to Washington politics in my forecasts in my career. And for a lot of business owners and a lot of households, they haven't seen this level of uncertainty either.
Yeah. David, anything you'd add?
No, I just think a lot of people, as you mentioned, had already discounted the fact that we probably would see a 10% tariff, and maybe that hangs on because we created the External Revenue Service, so I guess there'll be something there. And then the negotiations with China are going to be fascinating. The only way for China to get out of the box is to increase the value of their currency by 30%. That's the only way to get outside the box. And by the way, the reason we run trade deficits is because we're richer than everybody else, and because we're exceptional, our currency value is higher. So I don't know how all those rip-off rates come back to the floor after all this. I think you're at 10%, you're at China, and we'll see what happens with these other negotiations, but it's really about China at this point.
Yeah, and what are the impacts of that? I mean, normally we'd still be talking about that's a major, area where there's consumer exposure, could be a major source of inflation. I mean, it's all...
Yeah, I think the inflation is there. I mean, whatever I was getting ready to order to put on my wall to watch this in higher def, I may have to put that decision off and see what actually happens. And I guess, I don't know how many iPhones Apple shipped in yesterday via big airplanes. Right. And so we're just going to have to work through that. The play with the Chinese is never to do these things out in public. You got to do them in private, whether those negotiations start progressing or not, I don't really know. But I think the 10% tariffs are here to stay.
Well, Rick, with all due respect to David's television, a lot of people may be looking for a place to put that TV, which would be a house. And for a brief moment of time, we saw mortgage rates collapse as bonds got bought, yields came down, mortgage rates collapsed. Not anymore.
Mortgage rates didn't collapse. They didn't collapse.
Okay, they declined.
Would they go down? Yeah, not much. They weren't ever below 6%.
No, you could probably find a high five somewhere if you bought down the rate a little bit. My point is that now we're back to 7%. We got a 10-year that's at 4.42. What's the bond market?
We have $37 trillion in debt. The last guest said, "Oh my God, the capital account. We need that from foreigners. We're just such a rich country. We're rich. We're the boiling frog." You know what nobody talks about? Everybody's talking about the capital account. All this money that the trade deficit puts in the surplus countries that gets recycled in buying our debt, that robs us of any feedback loop that, hey, you used to be rich, now you're beggaring everybody by borrowing so much money, but you don't feel the pain because the trade surpluses overseas in China and Japan, it keeps coming and recycling. And now we're in trouble? Listen, we've always been in a bit of trouble, and in my opinion, we can't let those that own our debt end up telling us what tune to play. So if you look at it from that perspective, maybe what the president's doing isn't how you would do it, isn't how I would do it, but it really is more about results. And as far as companies and uncertainty, tough.
Yeah, it's well said. The bond market, though, David, is moving. The bond market appears to have been moving. Usually it sort of leads the stock market. Oil, guys, let's throw oil up there as well because oil was below 60. And I want to point something out that's not getting as much attention because everyone focuses on Trump in the U.S., and that is yields. The bond market moves, David, were the same around the world. I think Peter Bookvart said this to you, Kelly, right, in the exchange?
At least if you look at the countries that they had, it was Japan, it was the UK, it was Europe, it was Australia. So you can either read that as it's not just us, or as Dramatis kind of suggested, you could read that as, well, that's a lot of the Western kind of trading block that China might, or another, might be upset about. So there's a couple different ways to read that.
But it was fascinating because it shows it wasn't just a U.S. problem, David. So I guess my genius question to you is simply, what the hell happened? What happened the last few days? Is there a way to explain to we got a lot of non-pros watching CNBC right now, okay? They're scared, 401ks are down, 529s are down. What happened?
Well, I mean, I don't know. I'll tell you tomorrow when I have time to think it through. But
I think I don't know is probably the most honest answer
but here's the
we've ever gotten on CNBC.
Right. Well, all right. So people have their long-term asset allocations. They should be set up. So strategically, the long-term asset allocations always bake these things in. So the dollar was down, 70 basis points when I woke up this morning. So where was that in the linkage as well? I think it's going to take a while to do the autopsy and figure out, yesterday I had lunch and I heard a couple of guys talking about hedge fund pain and the basis trade, and I think that was part of it too. But in terms of how to apportion responsibility for that move, I don't know. What I do know is that, as Rick said, we're 25% of the world economy. Everybody else is 75%. If they go on a buyer strike because we do rely on their capital, it is going to create some upforce, whether it's perceived upforce that generated selling or it's actual upforce that leads to lack of buying. I don't know, but the perception was clearly that we were creating a large problem, and I do think that was the pain point that sort of facilitated the press conference.
Rick, what would you add?
Here's what I'd like to add. Whether it was COVID crisis, credit crisis, Thai bet, tech wreck, long-term capital, and all those, you couldn't call a timeout. Say, okay, COVID, the markets are crazy. Let's do a timeout. Let all the markets come back and regroup. But we did a timeout here. And the Dow's now up 2,500. The NASDAQ's up 1,500. My point is that this is really different this time. There's no timeouts in a real crisis. And technically, the economy really isn't much different than it was a month ago. I understand the uncertainty and the fact that all the data might be different, but that's something to think about. The other thing is, where all the action's been the last hour and a half? In 2-year notes. At 118, a 2-year note was at 368. It traded to 4%. Okay, that speaks volumes about how the Fed has a very small role in what's going on.
Well, Rick, wouldn't that tell you that they perceive a much stronger near-term economic outlook because the tariffs because you backed down?
I just think it's people that were looking for the Fed to somewhat intervene. That's changed. I don't care what the Fed funds market says. It doesn't necessarily mean it's going to come to fruition. We've seen many false starts. I really do think it's readjusting that the Fed is not the salve here. This is all about what's going on in the West Wing, and it's about isolating China. I think the Treasury Secretary said a lot of things I might not necessarily 100% agree with, but one thing I agree with 1,000% is you can see who the bad and good actors are based on the last several days and who is going along with trying to negotiate and who isn't.
And Rick is making a very critical, correct, and important point. And I want to say this to our audience. I tweeted out earlier. If you are seeing price hikes that people blame on the tariffs, they're lying to you. They're gouging. The tariffs they kicked in yesterday. Okay, now we had solar panel tariffs from the Biden administration. We had EV tariffs from the Biden administration. We had Trump tariffs 1 and some steel and aluminum tariffs about a month ago. So I guess if you're building a pipeline or anything involving a lot of steel, your prices may have moved. But for anything else, the retailers are gouging. I want to make that clear. That out of the way, now that we've done the public service, because I think it's important, Francis, to tell people the tariffs kicked in yesterday, right? Or midnight.
But tariff would have kicked in on Saturday, I believe.
So, but there's no time for any goods that you're buying now.
And that's a small number.
So,
Brian, this is the point, which is that you can have tariff policy. You can say it's a means to an end and that we've won a victory here. But there is damage to this economy because tariff policy and the president doesn't control the economic actions of all agents across the entire country. We know from past experience that when prices go up, other companies take advantage of it. We know that when tariffs are put on and then taken off, the companies don't then remove those prices. So there is actual changes that happened in this economy.
Repeat that. That was critical what you just said.
We know that when companies have tariffs applied and those are then removed, that not all companies then drop the prices after the fact.
Why not?
Because they're taking an opportunity in the economic environment.
Oh, so you're saying that capitalistic organizations might act in a capitalistic manner?
Absolutely. And if you're a capitalistic organization and you're in uncertainty and the stock market has created this volatility, you may pause decision making. So we're looking at tariffs as a revenue generation, but we also have to remember that this uncertainty, if it weighs on growth, and by the way, it will, and 10% tariffs will lower growth, that your revenue from everything from employee taxes to business development, that's also going to fall. So to say that we've removed this risk now or we've lessened it and therefore we can all breathe a sigh of relief, I think we may be underestimating the impact that flows through in these tentacles for the economy. We're still better placed now than we were last week. There's no question. But to say it was an on-off switch, I think is misrepresenting how this is going to go through.
So there's no off switch there. Yeah. Hold on for a second, David. Steve, I want to get you back in here because I know you've done extensive work on this, and we're going to go back to such shows as, like a week ago, where the 10% tariff, because we're still trying to figure this out. So to Francis' point, is 10% blanket tariff. Do we have any idea how much of that will actually flow through? The price of stuff that Steve Leisman buys is not going up 10%. Somebody's going to eat it over here. Somebody's going to eat it over there.
Right.
It's going to be a couple percent, right?
What's really amusing, Brian, is you caught me. I was looking in my email file for whatever modeling I might have had from the Wall Street economist about a 10% tariff. I think Goldman, a few other folks, I can't find it right off the bat. My recollection is it shaved something like 0.2 over GDP as opposed to, say, 0.8 or 0.9, which we saw was the modeling of the current tariff. So quite a bit less in terms of economic impact, still negative. And I don't know if it was 0.2 or 0.3 on the upside when it came to prices, but much less than the current ones because the estimates I saw for the most recent tariff regime, the one of a few minutes ago, was like a percentage point on GDP down, almost 2 percentage points on GDP down and almost a full percentage point up on inflation. So those seem to be gone now in terms of what's going to happen. We don't know if there's actually going to be any negotiation away from the tariff regimes that exist for other countries right now. We don't know if the 10% tariff can come off or that's now a permanent regime. I guess Wall Street would breathe a sigh of relief, but I mean, here's the question. Did we have to go through what we went through to get where we are now? I guess we'll debate this. The historians will debate it for a long time, but I'm sure a lot of people are saying, what? Really? This is what we got? For what?
Well, it creates a pretty amazing one-day move. I mean, the NASDAQ's up 10%. You have United up 25%. Delta, one of the strongest names in the S&P 500. David, that's now, people are going to go, I didn't get in maybe on Thursday. And by the way, a lot of people did. And we talked about this. A lot of retail investors got in when the market first started selling off. What do you do now?
I mean, it was hold your nose and buy. Right. And so it was a coiled spring. I mean, every single technical indicator, all the VIX, all the moving averages, everything said, hold your nose and buy. And I've been at this for quite a long time. The best day to buy is the day when I can't tell you why you should buy anything. Right. Yeah. And that day was basically yesterday. And then at midnight, it just got even worse. Well, so it was a coiled spring. But one thing I'll add about that.
Well, hold on. I want to stay on that point and I want you to add it, but I want to follow up on this. Yeah. I think you're making a critical point. OK, the CNN fear and greed index was at 4 out of 100.
Yeah.
Correct.
Okay, everything was awful. And that's the lesson here. And the market, who knows, tomorrow it may fall 10%. I don't know. To Kelly's point, JP Morgan Chase is up 10%, Morgan Stanley up 12%, United Airlines up 25%. Today, Walmart, best day in 5 years, up 10%. But it's a good lesson that you never try to time the market, right? Because the people that sold yesterday are now, who knows what will happen tomorrow, but for today, they've missed it. And I think this is a critical lesson that the best single days in the stock market generally come in fearful and uncertain times. I don't know a lot, David, but 30 years of doing this tells me that.
Well, and furthermore, if I have a client who calls and said, I can't take it anymore, I'm going to sell, I say, fine, what's your buy strategy? Right? And that's where they typically get tripped up, because I feel bad, so I want to sell. But if you can't articulate why I would get back in, what the trigger would be to get back in, you should not sell. Right? And so you got to do two decisions, not one.
Fair enough. Let's bring in Bob Pisani as well for some more color here on what's moving, where, and Bob, where some of the biggest reaction really is here as we digest the news.
Yeah, it's in cyclical sectors largely, but you know, it's just talking to people down here. It's hard not to come to the conclusion that President Trump blinked here. I mean, this vindicates people who are insisting that while the president has a much higher pain threshold than people anticipated, there is a pain threshold. It does exist, and recessions don't look good for your image. Stock market crashes don't look good for your image. So, Kelly, if you look here at the S&P 500, we have regained about half of the losses since the close on Friday. The close Friday at 56.70. We went all the way down to 49.80 or so, and we're back up here to the 5,400 level. So that's regained even a little more than half of the losses that we've seen recently. That's quite a move to the upside. And if you look at the sectors, it's largely in the areas of growth and cyclicals where the biggest moves are. So there's tech, and that's moving up in the last 20 minutes or so. It was initially 9.5% gain in technology. Materials was initially 7 on the pop, and you see it. So it's getting higher here. Energy was 6, now 7.8, and consumer discretionary also moving to the upside. Defensive sectors are up, but not nearly as much. So you see staples, for example, up about 4%, healthcare up 4%, and these, interestingly, have not moved in the last 20 or so minutes. So it's really the growth and cyclical sectors that have moved here. What there is not is any, as we like to say, any off switch for China. So if you look at MCHI, there's a number of ways you can look at China ETFs, but MCHI is one of the broadest ones. Since about 140, there has been a modest move up, but this is largely on a technical bounce that began earlier in the afternoon. You see here, it's really not up much at all since around 120 or 125 when the announcement was made. And of course, that shows you how difficult it is for China stocks to be moving here. So Steve Leisman asked, I think, the right question here, which is this worth more than just a one-day pop? I mean, considering this could all change with a tweet here. And 90 days is a long time. That's what encourages me, and that's what encouraged a lot of people as I was coming out of my meeting when this happened, that's a very good time period for people to sort of take their breath and figure out what's going on from here. So as of now, the market's coming to believe that this is a real break and that there is a potential for real negotiations with these 75 other countries that the president has said are calling. Kelly?
Bob, thank you so much. The NASDAQ was just up about 11%, so huge one-day moves. Let's turn to your colleague across the floor, Jim Cramer, who joins us, I believe, also from the New York. Are you at the exchange? Jim, thank you for joining. Where do we begin? Holy cow, what do you do? What does it mean? What do investors do?
Well, we've heard a lot of good wisdom from the panel. I know that Brian was talking about how you have to be in there for the hard days, so to speak, to turn into good days. But you know, a couple of things we've learned. Going home last night, and all the people who were short Apple, were short Nvidia, short the Mag 7, you know, anything. They were high-fiving and completely thrilled. And I would say that when the market goes down this much, day after day after day, that the shorts, well, they might just send me an invitation to your funeral. I mean, honestly, and the other people who, besides the funeral crowd, the Get Out Now crowd, they're wrong too. The Get Out Now on Monday morning crowd was wrong, and the shorts who were high-fiving were completely wrong. The shorts obviously playing a role even at this very moment because they still can't believe that this has happened, particularly led by stocks that they felt were kaput. I also want to point out that this is not Besant victory and all that stuff about, like, Lutnick loser, and it's not Peter Navarro's turn to go. It's none of that stuff. The president makes a decision. He likes to pit people against each other. That's something I learned when I was a judge for The Apprentice. I mean, he also is actually prone to some drama, but I'm sure right now they feel that they have an encirclement policy against China, that they look like the good guy. An hour and a half ago, I was listening to everyone on air saying how China has us and that we look like idiots and we've done it wrong. You know, you can't count anybody out in this scenario. So, I mean, look, Besson has 35 years, he likes to bring that up, of being on Wall Street. But I think that this was more of a collaborative effort than people realize. Can it last for a long time? Look, the president's mercurial. I don't think he wanted people, he said last night he was for Main Street, not for Wall Street. Main Street has 401ks and they have IRAs, and if he's for Main Street, well, then he's done pretty well. Yeah. But I would just point out that the narrative change says you don't want to short a bad market with this president, and you don't want to get out. You just stay the course. That's the right thing to do. Bulls make money, bears make money, and pigs get slaughtered. And in this case, the shorts were the pigs.
They were, Jim. I mean, on the political side, you know, the Besant thing, the Navarro thing, we'll move that. I think,
don't know.
I don't know, but I will say that there does appear to be some infighting at the top. And I don't care about the politics, Jim. I'm just curious about where this.
Why do we care? We want to make money and we don't want to lose money. You know, if it's Navarro, if it's Lutnick, I mean, who cares? Okay, we're never going to know. We're not going to be in the room.
Fair enough. I think it goes to where trade policy may end up. But let me ask you this. United Airlines, okay? I'm looking now at my screen. United Airlines is up 27% right now. I mean, it's still up over 6 months. It collapsed and it's come back. Has the fundamental business case for people getting on an airplane changed that dramatically in a day? This is the kind of stuff I don't know.
Delta had good numbers. I thought Delta was going to be awful. Delta had good numbers. Their single biggest raw cost, fuel. So they're going to do much better. I mean, fuel's falling apart here. I know that Chevron bounced back, blah, blah, blah. But, I mean, so you have two big positives. One was that Delta was really good. And second is fuel goes down. Now, these are volatile trading vehicles, and they're very excitable, and people get, it was cut in half. But it is important for people to recognize that when fuel goes down, it makes up for some of the people who don't show up in planes. The oil companies. I mean, I guess people got short them at the end. You know what, Brian, there's so much money being made by the shorts that they've really, really decided that they had their way. And it turns out that that was a mistaken way to approach making money.
All right. On that note, Jim, if you'll just stand by for just a second, let's get back to Eamon Javers. He's got more color about how exactly this all went down. Eamon, what can you tell us?
Yeah, Kelly, we're just trying to understand exactly the decision-making here at the White House when all this was decided. You heard Scott Besson just a short time ago at the West Wing door, and what the Treasury Secretary said was, and this was driven by the president's strategy. He said he and I had a long talk on Sunday, and this was his strategy all along. To me, that indicated that the decision to reverse these tariffs was made on Sunday, but that is not the case, according to Caroline Leavitt, the White House press secretary, who I just spoke to just a couple of moments ago in the West Wing. What she says is the decision to reverse course on these tariffs happened in the Oval Office today during a meeting with high-level officials and the President of the United States, and they hammered out the language of this Truth Social post in that meeting, and there was no decision back on Sunday that this was going to be the playbook, that in fact it was all decided today shortly before that post went out to the world. So what we're looking at with that social media post is sort of a near real-time view into presidential decision-making. She didn't offer any details on who was in the room with the president when he made that decision, or sort of why this decision was made today. We did hear Scott Besson, the Treasury Secretary, saying that it wasn't due to the bond market, which moved dramatically overnight. But so we'll have to wait and see if the president offers any more explanation for that. We're going to see him possibly a couple of times today. There's an event with race car drivers here at the White House. He might take some time out to talk about it there. Caroline Leavitt telling me that the president is very excited to talk to the world about this. So we may hear from him shortly.
And we heard from him this morning. We've heard from him a few times.
He said bye. He said bye this. I mean, Jim Cramer, the president, this morning said basically he told us, sort of tipped his hand on what to do. I think he said buy the market this morning.
It was kind of contemporaneous when I was talking with David about how it would really be great if he would just say he'd buy the market, which was good. I would tell you that he's attuned to the media, but what matters is that the press secretary, my understanding is that's exactly what happened. and they were very heartened about the number of people that came to the table. They felt that they did have the Chinese encircled. They decided to press their bet. They went from being looking like they were off base to recognizing that maybe they had a pretty good situation going, and they struck. I also think that there are enough people in that room who recognize that the shorts were having their way and actually think like that. Remember, these are people who are pretty seasoned. I mean, Secretary Ludwig's pretty seasoned. Secretary Bessent's pretty seasoned. They really get it. And look, I know Peter Navarro. He's a volatile guy. I've known Peter for a very, very long time. He gets it, too. So it's entirely possible that what you're looking at was something that came together when they realized that, wait a second, we got 75 countries that say we see eye to eye, and we've got one that doesn't. Well, let's just isolate the one that doesn't and make them look like they're just bad actors. And they succeeded. So I don't know. I mean, it worked. Look, if you're a bull, this was a good day. Don't outthink it. Stop thinking about the damn bond market. Look, I love the bond market. The bond market's moved like a couple of a nano basis. And yet that's all we focused on. Come on, we got to focus on helping people make money. That's what we do. We're not hedge fund people talking about a basis trade. We're trying to help people make money. And when we help people make money, tell them to stay in the game when there's total despair. Tell them not to quit. Tell them not to short. Tell them to get off leverage and let it play out. But stop confusing people with the damn basis trade. We are not on a trading desk. That is not our goal. We are not trying to get a job with Stanley Druckenmiller.
Jim, that was
not yet.
It's all about Main Street. Main Street. It's not
the last I looked, there's more people on Main Street than there are hedge funds. You know? I mean, maybe that's why we're niche.
But you heard my comment earlier, Jim, and we got Michelle Cruiser-Cabrera joining us.
Love her.
Here as well. I love her, too, but we got her, Jim. She's on our set.
She's the best.
So
she's common sense.
You heard me say earlier, whatever you take away from today, this is a lesson in not trying to time the frickin' market. If you're talking about the Main Street trader, they're not a trader. They're an investor.
There's 7 days a year that make all the performance. We know that over and over again. 7 days.
It should be a
7
song.
days. So you can get out now, and you can send me an invitation to your funeral. I'll just enjoy it by staying the course. And I got to run, but, you know, I got to go try out. I'm trying to get a job with, I don't know, with Pershing Circle, whatever it is. All right? Let me go get that job.
Yeah,
I need that.
Bill Ackman is very pleased about this. He's,
that's right.
Showering praise all around.
Jim with the rhombus.
Dynamite guy.
Pershing rhombus. It's a geometry.
Right. I got to get a job. I got to get a job with Zuckerberg, too. Let's see what he's up to. And I'm going to do Grok. And then, by the way, I'm using Perplexity now. It tells me that I should try to I can send my resume to David Solomon. Where's he? I'll talk to you guys later.
We'll see you on Mad Money tonight.
Love you.
Michelle just got back from China.
Like literally came straight up from the airport.
I mean, and lost in all of this, all the euphoria today is that those China tariffs now get escalated. And let's even paint the bigger picture now of what everybody's talking about. The Oceanic Federation. That now did you hear what Mark Rowan said this morning on Squawk Box? He said the U.S. and Mexico could become the new U.S. and China, basically. I mean, people are thinking this through on a cosmic level now as trying to isolate the Chinese. So anyway, curious your response.
Yeah, so I was there for the last 2.5 weeks. I was traveling with a foreign policy delegation, and we met with government officials, business leaders, students, journalists, et cetera. And look, I think the Chinese were extremely surprised at the ferocity that they faced in the tariffs because leading up to the announcement, they had viewed Trump's second term is very different than the first term. In the first term, they were top of the list, day one, China, China, China. His second term, they're like, wait a minute, he's focused on the border, he's focused on immigration, he's putting tariffs on China, on Canada and Mexico. They kind of felt like they had faded into the background.
That was absolutely the narrative.
So they were clearly very, very surprised. Economically, they know the best answer would be to do nothing. Politically, they cannot do that, in their eyes. And so this is why we have this state of escalation that I'm not sure.
Can they come up with nothing else? I mean, other than this continued escalation?
They have been sent the message that the most important thing to the president when it comes to China is them stopping the shipment of precursor chemicals of fentanyl to cartels in Mexico. And they claim that they have done what they can, that they've done a lot, that they'd like to work with the administration, but they are also not sure that that's what he really means. Maybe the administration just wants to contain China, and this is the way it's going to be.
I know we got DeWardrick McNeil of Longview Global is joining us as well. We still got David Waddell and Associates here on set with us, kind of get that bird's eye view. DeWardrick, Your take on the last 24 hours, because I'm out of questions. So where do we go from here?
Well, I think Michelle hit on some of this. I think there was a hope, Brian, that the Chinese and the U.S. could come together and try and negotiate a settlement, try to use the phase one trade deal as a baseline to come to a negotiated settlement. But I want to be clear here, Brian, the Chinese have actually been preparing for this eventual outcome if it were to be the way that it is today. So they have put in place a number of tools that they did not have in 2018 to try and fight back. As you know, it won't be symmetrical. They export about $500 billion to us, about $100 billion coming in from us to them. So there cannot be a tariff to tariff, dollar for dollar, tit for tat with China. But it's going to be a total economic war, as I call it, Brian. And our companies are going to be on the front lines here. Many of them that's dependent on China. They will be targeted.
Dewadrick, when in our conversations with government officials, this is a Chatham House rule, so I'm going to be partly vague here, but they tried to put on this face that they were ready for Trump 2. They had already been through Trump 1. It's hard to believe because you bring up the key numbers, which are they're an export economy. And this country is going to tax their exports dramatically, and that's going to hurt them a lot. And it remains to be seen just how much they can take.
I think that's a good point, Michelle. I will say, though, that today's announcement to remove the reciprocal tariffs on places like Vietnam, quite frankly, may help China because depending on what the negotiations between the U.S. and Vietnam is over these next 90 days or so, that still leaves an open border where goods can flow south, and you can still try and game this a little bit on just the trade side with China. But again, I want to stress there are going to be other things that's not based on just trade that the Chinese will try to do. But I think, Michelle, they would have liked to have negotiated, to be fair. I mean, they're going to fight back for as long as they can, but there is this deep asymmetry. But I don't expect that China will fold quickly. You will recall, Michelle, it was 20 months during 2018 of a tit for tat before we finally got to the phase one trade deal. So I think we still have a lot left to play here over what I'm calling the Great Trade War of 2025.
Is there any color you guys would add about what was happening in the Treasury market and like the extent to which they could or would or might or ever shall affect upwards our bond yields?
So we got mixed messages on the currency. There was this talk that perhaps, currency is the tool they have, right? We let the currency float very freely. They control the currency. And there was some talks that maybe they wouldn't let the currency depreciate, which would make the tariffs less effective. Maybe they would actually keep the currency where it is or actually let it appreciate and therefore make the U.S. consumer actually feel the pain and try to force the hand of the president. But I think we've seen the action in the last few days is they've gone the path of least resistance, which is to allow the currency to depreciate and offset the impact of the taxes. That's of the tariffs. That's what they did during Trump 1, by the way, almost entirely.
And I hear David, I hear Jim's points about don't try, we're talking about the basis trade on CNBC and time value and value at risk and all this other stuff that we know because we live this and we talk about it every day. I totally get that point. And I think, CNBC stands for Consumer News and Business Channel, not the stock market channel. So your clients, some of them, I think, might be looking to sell into this rally, right? Like they're down, they've made a little bit of money back today. What's your advice on how to approach a day like today?
Because I got to take a break and I got to call them. So for the clients, the way that
got 12 and a half minutes left in the show. Give us the 12 and a half minutes. We appreciate it.
Yeah, okay, I can do that. So my view of it is, again, the asset allocation has been set, right? We, as discretionary managers, de-risk the portfolios a little bit coming into this year because there was so much policy uncertainty, right? Then you get the downdraft in the market. The question is, what do you do with that? The way you make lemonade out of the lemons is you do a little tax trading, right? So if you've got positions that are down. You can sell them, you can harvest the losses, but you reposition in the same asset allocation as you had otherwise. And again, a lot of our clients are still generating capital, right? So cash builds up in a little bit of a reservoir.
Yeah.
The way that we've been telling them to deploy that capital is when we get to sentiment extremes, because this is a sentiment-driven market, not a fundamentals-driven market. So if the bullish sentiment on the AAI gets below 20%, we buy. We put some money to work, and we use those sentiment extremes as opportunities. And, you know, this is a great snapback here, and Jim mentioned it. This is longs coming in. This is also shorts covering. To what degree, to what proportion, I don't really know. Is this over? It's not. It feels super good right now, but there's going to be more back and forth, and China's going to have something to say either subtly or publicly. So the volatility is here. We have to figure out ways to use it until we get to clear.
And Michelle, I'll call on your knowledge, not as someone who just got back from China, but also somebody who sat on this side of the desk for years. I want to make something very clear, too. We're talking about tax losses and stuff. The S&P 500 is up 90% in the last 5 years.
It's been nice.
I just want to point that out. Like, it's been a rough week. But if you bought a year ago, you're probably flat to down. But if you bought 5 years ago, you're still way up. I just want to make that point because it's easy to forget. Michelle, we've lived through a lot of these markets in turmoil specials.
Yes.
Right? And they're all very scary. But that's, I think, a guest we had on earlier this week, Peter Maluk, made this point. This is why you get paid in the stock market, because there is risk. Things do go down.
Oh, yeah, absolutely.
All the time.
Yeah. If you have been well diversified, you've actually done okay. If
you're like 40% government bonds, you're probably breaking even right now.
Exactly. I mean, if you were long NVIDIA and long the Mag 7, okay, you're feeling a lot of pain. But if you had discipline and you said, you know what, I'm never going to let one position get larger than 1 or 2% of my portfolio, and you were consistently trimming, even though it's painful to trim a winner, isn't it? It's just, oh, you want to kill yourself, but you got to do it because
I don't know. We're not allowed to own stocks.
Oh, that's
Michelle,
right. I am now.
As you are now, but we're not. You get my point. I mean, we kind of are.
I feel it much more viscerally now that I'm allowed to own a portfolio. It's fantastic, but someday.
How has it? No, hold on. But it's important. How has that changed your thinking? We can't own stocks.
Oh, I know. It's
our family doesn't own stocks.
It's almost more interesting. It's much more interesting. It's so much more. It's so much every single day. I have. By the way, I also help manage an endowment for a nonprofit, and you think about these things all the time 100%. As well, and how to balance, and then worrying about, okay, you know, stocks and bonds went up together for decades. They can go down together at the same time. So diversification gets tricky when you're worried about those kind of things.
Well, I think you're right, Brian, to zoom out a little bit. We are in the midst of a technological transformation. So even if, and I know what the models say, if there's a 10% tariff, then we subtract 0.4% off of GDP. If productivity growth is going to be 2% or so, and we hold labor force somewhat constant, you're starting at a 2% level. So even if we deduct, you know, 0.5% for tariffs, I'm not saying that's the case, even if we do, there's still GDP growth there, and all of this productivity coming into companies makes them more profitable, so we expected profit margins to rise. Now, tariffs may offset some of that, but we are in a special period of time where technology is the really big story. This stuff is, sad as it may sound, I think nibbling around the edges. I think we're in a very prosperous period of time. We don't need policy to run amok, but the base case is prosperity here.
There's still a lot of confusion as well about these actual tariff rates. Dvorak, just to, as an example, that's more about the U.S. and Canada. You know, is it 10%? Is it 20%? It does depend exactly on who's in and who's out. But Dvorak, do you think there's something bigger going on here where the U.S. is trying to actually bring together a coalition of nations contra China?
I think that was certainly the clearly articulated plan during the Biden administration. I thought it was the right approach. You've heard me say that on air many, many times. I think starting it this way, meaning you would target everyone and then back off and say, well, now we're going to target China, provides a lot of uncertainty and whiplash for our trading partners. And so I'm not sure that our trading partners over these next 90 days have been done any favors. They are now going to try and figure out how to hedge on both sides because I'm not sure they can trust the U.S. or the Chinese for that matter. So I don't think it's been made any easier on them in terms of negotiations. You know, think about Vietnam, for example. You know, how do you close that back door? What's negotiable? what's not. And I think coming back to Michelle's point about China, it is very important to make clear to the Chinese what your goals are. That's the only way we're going to figure out whether or not these things are negotiable. Fentanyl and the precursors there, I think that's absolutely something that China can do more on, and it's negotiable. Trying to change China structurally, I don't think so.
I just worry. So I'm going to get myself in trouble with this comment, Michelle. Like, there's a point in a boy's life where maybe you have to get into a schoolyard fight, right? And your parents could say, son, don't fight. But if you do get into a fight, hit back, right? Don't just take the punches. Xi Jinping has had a terrible life. If you look at his life history, he lived in a cave at one point. The guy's had a
He went through the Cultural Revolution.
He went through the cultural. His parents were ripped away, egged, and tomato. Yeah, he's. And I do worry that between these two gentlemen, President Trump and President Xi Jinping, neither one of them is going to be the guy that walks away. And if we get this schoolyard fight, you hit me, I hit you harder, I hit you, somebody picks up a chair. Where does this end? How does this, is any one of these gentlemen able to walk away from a fight?
Yeah, so now you're asking about human nature, right?
Yeah.
Which is difficult. I would say the other side of that coin is you have two people who could actually talk to each other, right? This is, there is the potential here. I think one of the things that I discovered over there is that they're confused about the lack of structure. And I don't mean disorganization, I mean more that, under the Biden administration, there's layers of people, there's teams set up to negotiate, there's all this stuff. And that's not how it is with the Trump administration. It's a very short way to the top. And so who is their counterpart? Who do they talk to? They're trying to figure this all out. And this is something that I think is going to be negotiated at much higher levels than we would have seen traditionally in the past with, teams traveling here, there, and everywhere, and lots of calls. It's just not that way under Donald Trump. He is a former businessman. He is not a long-time government employee or bureaucrat.
What do you make of the people and some of the reaction as this has escalated? This is why we're talking about, using bond yields as one reaction function. The idea that the Chinese would move on Taiwan at a time like this, if they really feel like their backs are up against the wall, and to the point about the schoolyard fight, and they're looking to throw a punch. So
that is a debate here, and that is a debate there. There's the belief that maybe now would be the perfect opportunity, but there's also a discussion about the fact that President Trump has said repeatedly he wants to be a president of peace, and therefore that they could relax on Taiwan. Let's see what decision they make. But certainly that's something that we talked about, that was talked about a lot.
But the proxies came back online. Right, so now it's a 10% tariff for Cambodia, it's a 10% tariff for Vietnam, it's a 10% tariff for Laos, right? And so there is also a saying in China, which is that the mountains are high and the emperor is far away, right? And
but
so business is going to find a way.
I don't think Trump is going to go to Beijing, and I doubt that Xi Jinping will come to D.C. or Mar-a-Lago. But let's say, David, as an investor, we get a headline that says Xi and Trump to meet in wherever it is.
Positive.
But that they're going to be... Right? Does the market rip higher because now at least they're talking to Michelle's
because that's the big game. That's what this is all about. And I think before, with all these rip-off rates, they weren't really reciprocal tariff rates, it made it impossible for China to figure out how to route the water around the stones. Now, they can, and so it just reveals that this was about China all the time, I think.
Brian,
a little bit on the budget side and then China.
To Warwick?
Yeah, I think it's important here to note that there is, to your point about the schoolyard fight, that's going to happen. There is a pain point for both of these countries. And the question is, what is that pain threshold? And I think looking at the news today, it may be read in Beijing that the bond markets brought Trump to heel. And, Xi Jinping doesn't have all of those immediate concerns. So I think he will play this out. We did get to the table in 2018. I want to be clear about that. But it took 20 months and several rounds of back and forth and tit for tat. And so I think we should just ready ourselves for that. There's a pain point for both countries. Who reaches it first? I don't know. I think, quite frankly, China may be prepared to suffer a little bit more than we are, given the news overnight. That's how many people will read this.
Roderick brings up a great point, which is the natural checks on power here in the United States versus the ones that do not exist in China. There's the potential for political blowback if prices are too high, right? There are elections, there are markets that send signals. Donald Trump has to think about those things. Xi Jinping does not have to think about those things.
There are some who think the game theory here is create a window of opportunity to pass the budget bill. You know, they've got a couple of people in the House, they've got a lot of vulnerable Republicans, and they've got a short window to get this thing done. So just by imposing that 90-day delay, is it a political move here as much as anything? I mean, who knows, right? But that's...
You know, it's gone in the wrong direction. So there's internal debate within the
And it was
GOP.
the other way around in the first administration. To your point about the differences, you know, that was done first.
And I know Jim would disagree, but I think Scott Bessent won today. I agree. I do believe there was an internal fight. DeWarder, thank you. David,
Thanks
thank
so
you.
much,
That was
Brian.
awesome. Michelle, thank you.
Pleasure to be on.
Thank you.
There's the Dow up 2,222 points with a nearly 10% pop in the NASDAQ today. Don't have days like this often.
Closing bell starts now.
Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with breaking news. A presidential pivot sending stocks surging just about 90 minutes ago. That is when President Trump posted on Truth Social that he was authorizing a 90-day pause on reciprocal tariffs and a baseline reduction down to 10% across the board to everyone but China. Those tariffs are being increased to 125%. But it's the news of that stay that has turned this market in a very big way. Bonds, very much of the story, the 10-year yield surging over the past couple of days, unnerving many people. A strong Treasury auction, 1 p.m. today, taking a little bit of the edge off of that. We, of course, are watching that so closely. So many stocks are up, many tech names, including Apple, absolutely surging midday, and that is where they remain currently. Altimeter's Brad Gerstner will be with me exclusively in just a moment to break all of this down, plus a big lineup to follow. Ed Yardeni, Mohamed El-Arian, and PIMCO's Rich Clarida. It does take us to our talk of the tape, the pivot, and what it means now. Let's first bring in our Eamon Javers at the White House with the very latest. Eamon, they said this was the plan all along.
Scott, that's right. There was really no notice for this. It was a very quiet afternoon at the White House until all of a sudden it wasn't. We're trying to get a little bit more of a tick-tock in terms of the president's decision-making. We saw Scott Bessent, the Treasury Secretary, come out sort of impromptu to talk to reporters here at the White House. He said that he had a conversation with the president back on Sunday about strategy. Here's what what Scott Bessent said. He said, I had a conversation with the president on Sunday. This was his strategy going forward. But what I just heard from Caroline, there's the comment from Secretary Bessent. He said, and this was again driven by the president's strategy. He and I had a long talk on Sunday, and this was his strategy all along. So the implication I took from that, Scott, was that what Bessent was saying is that he and the president decided on Sunday that they would hold the tariffs through Wednesday and then pull them off in order to grant the market some relief. But I talked to Caroline Bessent, the White House press secretary. She says that's not the case. She said this decision was made very shortly before the president's Truth Social media post about this. So there was an Oval Office meeting. We don't know who exactly was in that Oval Office meeting. We do know it was high-level officials, and we know that in that meeting they made this decision, according to Caroline Leavitt, and then that's when the president put out this social media post that rocked markets and rocked the world. So that's the state of play as of right now. The president is scheduled to have an event here. It was pre-scheduled with race car drivers. We expect to see him. Caroline Leavitt says that he's very excited to talk about this to the world, and we expect that he might pause that race car event and talk to cameras a little bit about the decision that he just made.
Okay. Eamon, thanks very much for the update. Any more, let us know, please. That's Eamon Javers, as you see there, live at the White House for us. Now let's bring in Altimeter's Brad Gerstner, who joins us exclusively. It's so good to have you back with us after a couple days that we're digesting all of this. We all watch these markets. You were with us the other day in which you called this Trump tariff policy an unforced error, an own goal. Your reaction to this is what?
Well, let's be very clear. What I described as an own goal is if we were going to ride the nuclear option that Peter Navarro was advocating over the waterfalls. Clearly, the VIX spiked to 60. We were having turmoil on the bond markets. And the president, credit where credit is due, he's negotiator in chief. He's landing the plane. He's the master of the deal, the art of the deal here. Just when people were throwing in the towel, he gives a 90-day reprieve, and he says, listen, set aside the reciprocal tariffs. We're going to 10%. Flat across the board. We have 75 countries we're now going to negotiate with. We're going to align the world around a policy that will isolate China and deal with a real trading problem. So, for me, this was a day where, Howard Lutnick, Bessent, Hassett, Elon, all of those who had aligned around a common sense, strategic, targeted tariff policy, they won. And those who were, trying to drive us back toward multi-trillion-dollar tariffs that was really going to try to unwind the entire global trading system, which is really where I think doctrinally Navarro is. They lost, and the president makes the decisions. And I think the decision that he made today was a critical one to the markets, made it a critical moment in time. He wasn't paying attention to the fact the stock market is down, but the bond market beginning to crack, the 10-year going up to 4 or 5 yesterday, I think really got the attention of the White House. We had an auction that was scheduled to go off today. I'm sure that was being watched very closely as well. But the most important point here is we now have a durable framework that risk takers and investors like Altimeter and CEOs can execute against, it can plan against. And that was the real danger.
Yeah, but the damage has been done as well. The damage has been done, right? If you start the fire and then you put it out and then say all is now well, but the house is left half burned down, then you still have an issue to deal with. We've still wiped trillions of dollars out of the stock market. We still have left CEOs paralyzed because, let's be honest, I mean, it's not like 10% tariffs across the board for 90 days or a walk in the park when things are already unsettled and uncertain. And you're likely to hear about that in guidance that we get in just, actually, Brad, I'll come back to you in a second. The president speaking.
To us on trade, not only with, if you look at it, not only with China, but China was by far the biggest abuser in history, and others also. But somebody had to do it. They had to stop because it was not sustainable. Last year, China made $1 trillion off trade with the United States. That's not right. And now I've reversed it. It's for a short period of time, but we made $2 billion. We're making now $2 billion a day. And somebody had to do it. Roger actually said it. Charles Schwab was here a little while ago, one of the great financial people, and he said he's been waiting for 40 years for somebody to do what I did over the last month. And if you didn't do it, you wouldn't have a country. It wouldn't be sustainable. So I'm honored to have done it. And, look, nothing's over yet, but we have a tremendous amount of spirit from other countries, including China. China wants to make a deal. They just don't know how quite to go about it. It's one of those things they don't know how quite. They're proud people. And President Xi's a proud man. I know him very well. And they don't know quite how to go about it, but they'll figure it out. They're in the process of figuring it out, but they want to make a deal. And we have many other countries, as you know, many more than 75, and they all want to come. And they want to come here, or they'll go to Commerce, or they'll go to Treasury. We have our great senators here and congressmen. They'll call John. They'll do somebody. They'll go through somebody, but they're all calling. How do we do this? They all want to make a deal. Somebody had to do what we did, and I did a 90-day pause for the people that didn't retaliate, because I told them if you retaliate, we're going to double it. And that's what I did with China, because they did retaliate. So we'll see how it all works out. I think it's going to work out amazing. I think that our country is going to be at the end of a year or shorter, but I think we're going to have something that nobody would have dreamt possible. A man like Roger Penske, I don't want to get him in trouble with China, so I won't, but he would know that someday you have to cut the bow and you have to do what you have to do, right, Roger? And that's what I did, and I'm very happy to have done it.
Mr. President,
was there anyone
the Prime Minister of Greece just told Breitbart's Matt Boyle that he thinks absolutely the European Union and the United States could work out a trade deal that's win-win and, quote, mutually beneficial to both sides. What do you think about the Prime Minister's comments, and do you think a deal could be struck with the European Union?
First of all, I know him. He's a good man, and I appreciate his comments. Yeah, a deal could be made with every one of them. A deal's going to be made with China. A deal's going to be made with every one of them, and there'll be fair deals. I just want fair. They will be fair deals for everybody, but they weren't fair to the United States. They were sucking us dry, and you can't do that. You know, we have $36 trillion of debt for a reason. We don't have it there for fun. They have it for a reason. And people took advantage of our country, and they ripped us off for decades. I've been thinking about this for decades. If you ever saw me on television, I was young like these guys. And those were good old days, I'll tell you, Roger. But I was like these guys, young, and I was talking about it. Nothing changed, and nothing was done about it. Then I did it. In my first term, I did it, and did it well. We took in hundreds of billions of dollars from China and others, and I started the process, but then we had to fix up from the COVID mess caused by China. We had to fix up from that, and we did a good job of doing it. And when we handed back the reins after a rigged election, and when we handed back the reins, the stock market was higher than it was before COVID coming in. So, you know, we did a great job, but we didn't have time to do the big thing, which we're doing now. And it's, you know, it's like a patient is sick, you have to do surgery. Patient is very, very sick. And Joe Biden handed us over a country that was in very serious trouble, economically and in every other way. They let China run away with things. They let other countries run away with things. And maybe worst of all, in a certain way, is what they did at the border. We had people pouring into our country by the millions. Many of them were murderers and drug lords and thieves and people from prisons from all over the world. And there were people from mental institutions, insane asylums. They were taking their mentally insane, and they were dumping them into our country. And I'll tell you, Tom Homan and Kristi Noem are doing a fantastic job in removing them. And now the courts, the Supreme Court just gave us numerous good rulings where we have to be able to get them out. You had other judges trying to take over the system. And think of it, they take over. They want these people coming back. Tren de Aragua from Venezuela, the Venezuela jails that cut off the fingers of a man in Colorado. They cut off his fingers because he called the police looking for help. They said, "Did you call the police?" He said, "Yes, I did." "Put your hand down," and they cut off the fingers. This is what they want to bring these people back now. And I want to thank the president of El Salvador for the job he's done, because that is, that's the way it has to be done. And it's too bad. Yeah, please.
Chuck Schumer and Nancy Pelosi, they've been talking about tariffs for decades. How come when these Democrat elites want tariffs, everything's hunky-dory, but when President Trump wants tariffs, all hell breaks loose? Do you see this double standard?
I love this guy, whoever the hell that is. That's really nice. I appreciate that question. No, Chuck Schumer, Nancy Pelosi, everybody knew you had to do it, but they never had the guts to do it. It does take guts. It even takes guts for our country to go through it. That's why I say be cool. They were saying about, just be cool. It's going to work out. It's going to work out, and it's working out. I can tell you, working out maybe faster than I thought. But I said it's going to take a little conditioning. It's a transition to. It's really, I think it's a transition to greatness. It's going to be greatness. Our country is going to be. There'll be nothing like it, and people investing in our country, they're going to do better than they've ever done before. We have more car manufacturers, Roger, coming into our country now. Speaking of cars. We've never seen anything like it. And they're coming in because of the election, but they're coming in because of the tariffs, because they don't want to pay 25 or 50 or whatever it may be.
All right, that's the president of the White House, as you see outside at a event with race car drivers, obviously along with with Roger Penske, a legend from that industry. But the president saying it's working out, of course, talking about his 90-day reprieve in his trade war. Nothing is over yet, he said, but that everybody, in his words, is calling to try and make a deal. The stock market has already reacted to his post, clearly on Truth Social earlier. An extraordinary day. Back with Brad Gerstner of Altimeter. Look, as we were talking, right, so we've had the pivot, but we've put a lot of trauma through this market, through a lot of trauma. And, you know, you've wiped trillions of dollars in value out. You've caused the bond market extraordinary stress. You've left CEOs, as I said, paralyzed, and that just doesn't disappear with a pivot.
Yeah, I get, you know, Scott, remember, it was a week ago that we announced these tariffs. I know it feels like it was a couple of years ago at this point in time. So, yes, there's been maximum uncertainty. Yes, he was hearing from a lot of CEOs that this uncertainty was causing demand destruction. I'm not saying that all this change happens painlessly, but I've talked to 5 CEOs in the last hour, including some of the largest CEOs in technology, and they've all told me this was exactly the prescription they needed, you know, so that when they get on their quarterly calls now, they can actually, you know, give guidance as to what the path ahead looks like. You know, what wasn't working was them not having a flight path, not knowing whether or not we're going to have 50% tariffs, 70% tariffs, but knowing we're going to have 10% tariffs, that we're going to negotiate down from there with these other countries. That now gives a framework against which I think people can operate. And even Delta today, before these announcements were made, Scott, right, they gave their forecast. Their forecast clearly showed demand destruction, and the stock was up 10% even before the president came out and announced the 90-day reprieve. So I think that's evidence of the fact that the market was discounting well ahead of where all this was, that there was a lot of fear in the market. Listen, you have a 10% move in the NASDAQ since the president's tweet. That just goes to show you how much fear and how much discount there was already in the market. But most importantly, I think you nailed it, comes to the fundamentals. Are these companies going to be able to get back on path, right, and look back at this and say, okay, we had a 1-month delay in terms of our plan for the year. We ran the risk that if this continued for another 4, 6, 8 weeks, that we're going to find ourselves with 1 foot in recession. So I think today was essential. I think the president did what was needed to be done. And I think this will go a long way to helping us avoid, you know, the recession path. But as he said, we're a long way from out of the woods. So I think this is an important start, but there's a lot of work to be done.
But I just want to underscore this one point with you, too, that you have spoken directly today with some large technology company CEOs, I'm assuming maybe some in the Mag 7, you can correct me otherwise, who now feel like they have at least a path towards visibility that they might not have had even 3 hours ago, and we may hear that reflected in coming earnings calls.
Correct. I talked to the same CEOs last night. Listen, over the last 3 days, there's been a lot of concern. In particular, the concern centered around comments by Peter Navarro, where he said even if Vietnam reduced its tariffs to 0, that wasn't enough. We had to eliminate the $125 billion trade deficit, which, of course, everybody knows is impossible to do. So if that was the standard, if that was the framework, then we were in for a very long and destructive process here. So this was, you know, again, the Bessent, the Howard camp within the White House leading the path forward, saying, no, this is about tariffs. This is about targeted, smart, and fair tariffs. The president just reiterated again, you know, when you broke away there, that he's about making deals, fair deals. He said these will be fair deals. And in fact, he went on further to say he expects to get a deal done with China and for that to be a fair deal. That's exactly what CEOs needed to hear. I think if you look at how business is, I think Q1 was pretty reasonable for all these companies. And it was really only over the last 4 to 6 weeks, but accelerating after the announcements of the reciprocal tariffs last week, the uncertainty got injected into the market. We saw it reflected in the VIX. We saw it reflected in the bond market. And all of those things were having very negative consequences in terms of the demand coming into these businesses. My suspicion is that a lot of that is allayed as of today, and these CEOs are going to be in a lot better position, a lot more confident position when they get on these calls.
Some of these stock moves, Brad, are just extraordinary, double take like moves, clearly. NVIDIA, for example, is up near 17%. You told me the other day that you were buying more on the most extreme weakness of that stock. For people who listen to you about these names, what are you doing today on this news? What would you advise people to do now with some of these largest stocks in this market?
Yeah, I mean, listen, moves like this are debilitating, Scott, and I don't love this volatility. You know, I know on Monday and Tuesday that Schwab and Robinhood, they were having record volumes, because retail investors, folks like my siblings, my nieces and nephews back in Indiana, they get worried. They can't afford to lose 20 or 30% in their retirement accounts. So they do the worst thing, right? They're forced to sell on days like that because the fear is going through the roof. They got to prevent further losses. That's hugely unfortunate. So this is a Main Street problem when you have this level of volatility. But as I look at it today, I'll just throw out a framework. Go back to April 2nd. And look at what the prices were of these companies on April 2nd before we had these announcements. And even with these massive moves today, most of these stocks and indexes are still trading below the level they were trading at on April 2nd. And I would argue that now we're in a much better position because we know the flight path forward. And so, yes, NVIDIA is our largest position. We bought a lot more on the bottom. But listen, we were nervous like everybody else in the market. This was a really important step forward, but we got to see follow through. I expect we will see follow through in terms of these negotiations. And I'm hopeful. And the big win here is that we get to the negotiating table with China, we get a deal done with China, we extend the tax cuts, and we continue down the path of DOGE and deregulation. If we get all these things, the market and the economy can look very different 5 or 6 months from now. It's rare in my 25 years of doing this, do you have such negative views and such concern juxtaposed right next to this potential positive outlook for the economy, but it's where we are. And the president, like you said, you can love or hate the tactics, but he's the negotiator in chief. And today is an important day in terms of setting us on a path that I think is durable for the economy.
We'll leave it there. I so much appreciate you coming on. Certainly you came on in the depths of it the other day, and to come out now and react in real time, I can't thank you enough for doing that for us and our viewers. Brad, thanks. We'll talk to you soon.
Good to be here, Scott. Good to see you.
All right, that's Altimeter's Brad Gerstner exclusively with us, reacting in real time to what all of us are looking at. Just an extraordinary day in the market. The NASDAQ is now up 11%. 11%. That's the highs of the session, and many of the names within it have just had an afternoon, to say the least. Let's bring in our senior economics reporter, Steve Leisman, with more as well. As people are reacting, Steve, to this pivot, whether it's investors like Brad or economists like Jan Hatzius, who quite literally an hour and a half or so ago put out a note saying that a recession was his baseline case, and now has put out a new note within the last few minutes saying, because of the pivot, quote, as a result, we're reverting to our previous non-recession baseline forecast with GDP growth of 0.5% and a 45% probability of recession.
I want to read you what Jan told me. I got on the phone with him to confirm the call, and what he said was, we've gone from recession level increase to a still very growth negative increase in the tariff rate. So what I'm hearing here, there still very well might be a recession, given there's a lot of uncertainty out there. And there are still big tariffs, but they're just not as big as they were. It kind of picks up on what Brad was saying. 10% could be the negotiating rate down from there. But let's be clear where we're at. We started off at like 2.5% tariff rates. We went to 30%, and now, according to Libby Cantrell, we're now at 20% tariff rates. Goldman says it's more like 15. We'll debate over that. We still have very large tariff rates. There's still big negatives being forecast because of these tariffs, and big increases, at least a percentage point around that, for inflation. So the tariffs didn't go away. They're still there. They're still very high. It's just, as the market is now pricing in, not as bad as they were.
Well, I mean, look, you could say, however you believe DEFCON is, 1 being the worst or 5 being the worst, we've gone from the worst to off of that for the time being, as it relates to almost everything. Right. And we can at least think that, well, as Brad said from his direct conversations with CEOs, if anything, CEOs can feel like they maybe have a little more visibility for the time being, that they don't necessarily have to plan now for the very worst outcome, if we take things at face value for where they stand at the moment we're having this conversation.
Yeah, I don't disagree with that at all. There's a little bit more certainty there. There's still a 90 days we could come back. Unclear what the criteria will be. I think, I don't know if it's a leap by Brad or maybe he has some inside information that the 10% across the board tariff is negotiable. Phil LeBeau also pointing out we still have large tariffs on the auto, so I don't know how they may or may not have moved. The other thing is you did have a little bit of relief in the Treasury market. That's good news, although rates are still elevated. So I don't want to take the shine off of what you're saying, Scott. We have come down a notch or two, perhaps, in the DEFCON scale, whatever it may be. I think DEFCON 1 is the high one. But in any event, it's not all the way back down. And if you put up a chart that goes back to last Wednesday, you'll still see we're down relative to that. And now I think there's a fascinating debate. Do we capture that again? And whether or not, I think you alluded to this earlier, is there any permanent damage inside the plumbing of the economy or the plumbing of the financial system? We had not heard of it, but there still was concern up to this. Maybe now it's all relief and it's all fine. Let's hope so.
Sigh of relief inside the Fed this afternoon, Steve?
I think so. Look, what Powell said very forcefully, Scott, on Friday was these tariffs were much larger than we thought. That means the economic effects will be much larger. But I don't know now if he would say they're just large. That's a really interesting question that I think we have to ask. Remember, we still have probably an operative tariff rate in this country of 20%, one of the highest in the developed world. And there's still a lot of pricing to be done. Maybe your upcoming guests can understand this. What does it mean? Well, we went down 10% in the effective tariff rate to still a very high rate. So there's still a lot of calculations to be done about which companies have losses where.
Steve, thanks so much. Appreciate that. Steve Leisman, our senior economics correspondent. Let's get back now to Eamon Javers at the White House with more on those comments from the president. Eamon?
Scott, that's right. Just a couple of comments here to flag for you. One is that when the president was asked why he decided to put in this 90-day pause, he said, well, I thought people were jumping a little bit out of line. They were getting yippy. You know, they were getting a little bit yippy, a little bit afraid. So the president, presumably they're talking about financial markets. He also said he was watching the bond market last night. He said people were getting a little bit queasy in the bond market last night, but he said that today the bond market looks to him beautiful. And also the president was talking about some of the people he was watching on television, including Jamie Dimon of J.P. Morgan. The president said he watched Jamie Dimon's interview on television this morning. And, you know, we saw Jamie Dimon saying that the likelihood of a recession was now increasing. That comment clearly resonated with the president, who said that he views Jamie Dimon as somebody who's worth listening to on Wall Street. So there was this debate about, you know, whether Wall Street CEOs could even reach this president and make their point to him. And it turns out that one of the ways to reach the president is by going on TV and talking through the television to him. Scott?
Eamon, thanks. I think anybody who's played bad golf like me knows what yippee means.
Right.
Certainly knows what yippee means. When you just can't make a putt because you're just not straight. Eamon, thank you. Thank you very much for that update. That's Eamon Javers. Let's bring in Ed Yardeni of Yardeni Research. It's good to have you here.
Thank you.
Bond market do this?
Absolutely. I think the bond vigilantes got the president's attention, as Eamon just said. The president was watching what was going on in the bond market. I think we were about to have a credit event, and that's a sure way to create a recession. So everything kind of fits together. In the past, it was usually tight monetary policy that caused the credit event that caused the recession. This time around, it was tariff policy that was threatening recession, and the bond market was anticipating a real crisis.
What now?
Well, I think that, you know, we still have obviously a tariff issue, and it looks like there's a lot of confusion whether the 10% is negotiable or not. I mean, a 10% tariff, if it's not negotiable, is still about $300 billion. That's still a very big tax increase. It'll probably mostly hit American companies and American consumers, and so that is an issue. But I raised my odds of stagflation recession scenario to 45%. I was thinking about taking it higher.
Glad you waited.
But I waited. I did think that the financial markets would have an influence on the president. I've been talking not only about the bond vigilantes, but the stock vigilantes. The silly notion that the rich own all the stocks, so it doesn't really matter if the stock market's down. It's ridiculous because there's a lot of people with 401ks. There's a lot of people that are involved in the market, even if it's small shares. It matters a great deal to them. I was hearing a lot of people that I went and got a haircut the other day, and everybody was talking about how much money they just lost last week. So I think that this is a positive development for the economy.
Did we get a bridge too far in terms of some of the damage that's already been done? And is that yet to show its face within this market? Certainly earnings remain the greatest unknown that we could talk about.
I think it could have been a lot more damage if it went on a few more weeks, a few more months. But I think the fact that it got nipped in the bud so quickly is important. And I think Brad made a very good point here. Is I was really dreading the idea of going into an earnings season and having managements have to say, we don't know what this is going to do to our business. Now they don't have to say that.
Well, they probably will still say that.
Yeah, with regards to China, for example. Yeah, I think China, the issue with China is clearly not over, and that's a big deal.
Is this enough of a development today that you would be comfortable suggesting that people buy into this?
I never told anybody to sell it. I told everybody it's too late to panic. And I feel pretty comfortable with that. And I thought there would be buying opportunities. But, you know, you have to be a mind reader. You have to read the mind of the president. Because clearly this has all been initiated by the president. Depends on what he's watched on TV. And, you know, he listens to his advisor. At the end of the day, he says, you know what, this is what we're going to do. And it just kind of comes out of the blue, and we all got hit with it.
Well, look, I mean, you know, someone like Jamie Dimon's an influential person.
Yeah, absolutely.
When he's talking about the probability of recession.
Yeah, well, thank you, Jamie Dimon.
But let's be clear. Everybody, and I'm sure you as well, everybody that I've been speaking with, from the highest of hedge fund managers to the highest levels of banking in this town, were worried about what was happening in the bond market.
Absolutely.
And it had a real chance to get out of control.
Yeah. I think that's absolutely correct. We could have had a credit crisis and a credit crunch, and I think this reduces that likelihood. It's not impossible that something bad will still happen. We were hearing about a lot of small businesses were really about to get annihilated because they are so dependent on trade, on what they import.
Are you still unnerved at all about the backing up of yields? How much do we need that? Let's just say, you know, you take this issue off the boil, the so-called basis trades and all that stuff that got talked about a lot on our network today. Let's say the unwind there is, if not fully finished, close to it. Do we need yields to come back down by a significant level to make you feel more comfortable?
Well, it would help the mortgage market. It would help the housing industry. But we've been thinking that the bond yield is kind of back to normal where it was before the great financial crisis. We've been thinking the 10-year should, in fact, be trading at 4.5%, plus minus 25 basis points. We did blink and we lowered that a bit to 3.75% to 4.25%. But no, I think the economy is resilient. I think it's proven over the past 3 years its resilience to tightening of monetary policy. I think we're going to be surprised. I think we're going to have a surge in auto sales as people try to beat the tariffs on autos. As Steve said, we're not out of the woods on the inflationary consequences of tariffs. We're going to have higher auto prices if Trump doesn't change his mind on that.
You know, one of the things that left investors so flummoxed was the typical safe havens haven't been safe.
Right.
Bonds, the dollar, to some respect, even munis. Munis coming off their worst day in 31 years.
Even gold went down a couple of days there. Yeah.
Do we return to safe haven status for the kind of asset classes that we've always believed were?
Yeah, look, I agree with your concern that we may have already done a great deal of damage, but it was really only been a week or so. I mean, it's been since Liberation Day, April 2nd. And to the extent that everybody can kind of breathe a little easier, I think that's a good thing. And I think, yeah, the treasuries are still safe haven.
All right. Ed, thanks so much for being with us.
Thank you.
Helping us understand these developments and what it all means in the big picture. That's Ed Yardeni joining us here once again at Post 9. Now let's bring in Richard Clarida. He's PIMCO Global Advisor, the former Federal Reserve Vice Chairman. What a day to have you as well. I appreciate you being with us.
What a day, Scott. Where to begin?
Yeah, you tell me. What's most on your mind now?
Well, you know, typically it'd be the Fed minutes, but I think, first of all, the minutes were stale already, given that the meeting was well before Liberation Day. And then, of course, we had two things, at least in fixed income. We had a very, very successful 10-year auction. And then right after that, we had the announcement that you've been talking about the delay in the tariffs. So obviously very risk-friendly announcement there. And but got to remember that the tariffs even now are much higher than they were, a month ago, and the highest they've been in some time. Although a lot of that is the U.S.-China piece of it.
A sigh of relief inside the Fed, you think, from the Fed chair? Same question I asked Steve Leisman, but you probably have good perspective on that.
The way I characterize it, Scott, is the numbers today, 10% across the board with a lot of extra tariffs on China, is probably in the ballpark of what they were penciling in, at least in one of their scenarios, maybe not their baseline. I think what was really probably of concern to them, and the chair indicated that last week in his comments, is that these numbers were much, much bigger than I think almost anyone, including the Fed, expected, which would have made their job even that much harder. But, if these tariffs are in place, we're going to see some upward pressure on inflation, at least for a while, and potentially, a drag on economic growth. But the magnitudes, I think, will be less concerning than they would have been otherwise.
You guys watch the bond market over there as close as anybody.
Yeah.
How close do you think we were to the Fed having to get involved by one way or another? I don't, whether it's buying treasuries or stopping QT or whatever tools they feel were, in their box to deal with stuff like this. How close do you think we were to the Fed doing anything?
If you use green light, yellow light, red light, I think we're at yellow light. I think you were beginning to see some indications, not only the magnitude of the sell-off, but what you were seeing in swap spreads, in the repo market. I think the lights were flashing yellow. I wouldn't want to give you how close where we were, but clearly I think we'd seen enough in the markets, both in the yields and in some of the other signals, that it was definitely, I think, probably on their radar, our screen.
What do they do now, do you think?
Well, I think they take it day by day. Tomorrow there may be another surprise. So I think they take it day by day. The chair said many times that they think monetary policy is well positioned. I think they're perfectly content to sit on their hands. And I think they have a little bit more breathing room now to do that if what we heard today is, in fact, remains in place. I do think that, and the minutes indicated this, and we've heard this a number of times from Chair Powell, I do think if the economy does crack, and I certainly hope it doesn't, but if it does crack with a rise in unemployment and a sharp slowdown in growth and employment, I think they will cut. But I think now the focus is just getting more information on how the tariffs are going to impact the outlook and the inflation data.
How closely will you all be watching what bond yields do from here, right? They're still elevated. We still have issues to contend with.
Yeah, oh, sure. Well, pick up on something Ed Yardeni said a moment ago. If you just look at the level of yields right now, it's basically in the middle of the range that we have been in really now since the fall of 2023, somewhere in the high 4s to the low 3s. And that would be consistent with, a constructive, if not gangbusters, economic outlook, and also consistent with all the debt issuance that the government's doing. The budget deficit this year is going to come in at 6 or 7%, potentially more down the road. So that's more or less in the range that you'd expect, given the macro conditions. We saw the yield get down, of course, to the 380s last week on a flight to Treasury safety, but this looks more or less in the ballpark, I think we'd expect.
Can you set the record straight, because of your prior job as Fed Vice Chair, on the relationship between Wall Street and Main Street?
Oh,
there
sure.
seems to be a suggestion by some in the administration that they're two entirely different things, that one has minimal relation to the other. The counter argument to that, of course, is that the two have never been closer or more intertwined, that the wealth effect is real, that the performance of the stock market trickles down to what happens on Main Street. Certainly corporate performance matters for people's livelihoods and jobs. What's the real story?
Well, look, I mean, if you look both at direct holdings and through retirement accounts, a very large, certainly well more than half of households have some exposure to equities. Obviously, it's 2/3 of Americans, live in owner-occupied housing. That's an important part of the wealth effect. And then importantly, and I did emphasize this, Scott, in a number of speeches I gave as vice chair, the stock market and the Fed oftentimes are looking at the same thing. Growth and inflation. Strong growth, low inflation is good for the stock market, and strong growth and low inflation is good for the economy. So sometimes you can get a little caught up in things like central bank puts and the like, but a lot of times markets and the Fed are looking at the same macro data.
Well, I mean, you agree, it sounds like, that the performance of the stock market directly has an impact and a trickle down, so to speak, on Main Street.
There's no doubt in the empirical data, and this was established decades ago, there is a wealth effect in the U.S. consumption data. Now, measuring it precisely can be challenging. Estimates are anywhere from 2 or 3% up to 10% of a change in wealth eventually flows into consumption. So, there's absolutely no doubt about that in the data.
We'll leave it there. Mr. Claret, I appreciate you so very much. Thank you for being here today.
Thank you.
All right, Rich, we'll see you soon. For more on today's rally and President Trump's tariff pivot, let's now bring in Mohamed El-Erian from Allianz. Good to see you as well.
Thank you, Scott.
Your reaction?
Like you said, it's an important pivot. The question is, how long is this pivot and how much of a reversal is it? I think of it as this was a necessary step to calm markets, but it will not prove sufficient unless we go further in the reversal.
To what degree?
Look, we came very close today to the line that separates wild market movements in the bond market to market dysfunction. Rich just mentioned a few things. Look what happened to the off-the-run liquidity. We got close, and that's a very uncomfortable place to be. So we don't want to get there again, because the more you get to that point repeatedly, the higher the risk that you're going to cross it. So I think you need certainty. I think the 90 days, that's a good period, but quickly people are going to start asking what happens next.
I mean, we may never get certainty, right? But we don't have the degree of opacity that we have been living with for the last many weeks. That in and of itself can keep us from going into a darker place economically, can't it?
Yes, it can. If you talk to CEOs, and everybody has their own group of CEOs, so let me tell you what the people I speak to, my friends, are telling me. They're saying that this will stop us from cutting costs, which is where we were in terms of having to adjust our income statement and having to look at our balance sheet really carefully. But it doesn't give us enough confidence to go back to normal operations. So we will be on the sideline. This will be a wait and see. But the good news is it didn't get them to be uber defensive, which would have slowed this economy into a recession. But it still means that they're not going to be contributing to the economic growth that we need.
Where does this all leave the Fed, do you think?
So I think the Fed got very close to having to intervene for the wrong reasons, and that is market malfunction. And it would have been, as you said, some combination of buying treasuries, reducing interest rates. I think we got close to that point today. Now the Fed goes back to the sideline. The Fed waits and see. It will need overwhelming evidence that unemployment is going up because inflation is going up. So it doesn't have the degrees of freedom that it had in previous shocks to the marketplace and to the economy.
Are you still chair of the Under Armour board, Mohamed?
I am.
Let me ask you to put that hat on, if you could. And I'm not asking you to reveal boardroom conversations that obviously you're having with your colleagues and maybe even the CEO of that company. But can you let us somewhat into the room of the kinds of things that CEOs are talking about, what you're hearing when we talk about bringing manufacturing back to this country? If you ever would foresee a day where Under Armour products, for example, and textile companies would be manufacturing their things here, and what the ramifications of doing such would be?
So, Scott, I won't speak on behalf of Under Armour. That's for Kevin Plank, our CEO. But I will speak on behalf of what I think is a conventional wisdom and separate feasible and desirable. Is it feasible to bring it back? Yes, but it will take a long time. It takes a long time to not only just build the factories, but to find the trained labor force. We would be going back to an economy that we haven't had for a while, and we would have to retrain labor. We would have to do a lot. So is it feasible? Yes, but it will take a long time. Where the big debate is it desirable? There's a view that, yes, you want your producers to be at home. There's another view that says, this is the wrong sort of jobs that we want right here. We can do really well in high-quality jobs. We don't have the labor force to do this, enough of this, and let's not undermine our edge. So I think, to answer your question, most companies will tell you it is feasible, give us time. But then there's a really big question, is it desirable for the economy of today and tomorrow? And we are on the verge of major innovations. So this is a really important question.
When you say it's feasible, the pushback to that would be, well, at what price? At what cost to consumers to go out and buy a pair of Under Armour sneakers? And by the way, I've known Kevin well enough over the years that, he talks about the company that you're chair of the board of as a technology company. The kind of investments that he's made and that you all have made over the last years to technologically advance what you all do. There are severe ramifications in terms of price and cost and end user that have to be considered here, too, to decide truly if it's feasible, the word you use.
Yeah, I mean, if you try to rewire supply chains, if you try to rewire the way the global system works, it is costly. And there is a view out there that this is a Reagan-Thatcher moment. This is a moment in which we rewire not just the domestic economy, but the global economy, and we emerge after a year, after 2 years, with a slimmer government, a more enabled private sector, operating in a fairer trading system. There is that view, but there's the other view that says, you know what? It will take a hell of a lot longer, and the journey to that destination will trip you up, because the journey, as you say, is stagflationary. So, if you ask me what are the probabilities, I will tell you it's 35-65. And that is what the administration has to decide. Is it worth taking the risk of a really bumpy journey for an uncertain destination?
I really appreciate your insight, especially on this topic. Mohammed, thanks so much. We'll talk to you soon.
Thank you.
It's Mohammed El-Arian. Let's bring in now Renaissance Macro's Jeff DeGraff. Watches these markets as close as anybody does, certainly internally in the technical side of things. It's good to have you here, man. All right, I don't know how a technician keeps his head straight in looking at a market like this. You tell me.
Well, I mean, I'll be honest with you, Scott, and this has taken 35 years of experience to do this, but I just don't get wrapped up in the narrative. It's hard not to do, but I've learned to do it, and I just look for the consistency of signposts, and a few of those things really fired for us Friday. We got pretty long on Friday, and we were looking for a substantial put-call ratios to start to kick in, and we were getting that triggered. We started seeing what we call negative volatility alerts, which are these standard deviation moves. We had over 50% of the constituents in the S&P there. And that to us is the making of, it's scary for sure, but that's pretty consistent with points where you kind of get to that max stress. And so we had beta, and I think this is probably the most important thing, and we warned clients late last week and early this week that beta in our ranking was in the 0th percentile. In other words, you hadn't seen returns this bad for beta ever in the history of our data. And the last time they were even close was in 2020, where we were coming or in the grips of the COVID crisis. And then in the summer of 2022, which was about a week before the lows. So that just, we sent a message out to clients saying, don't be short beta here. It's going to be really dangerous to be too short beta. So think about what can go right. And clearly that's playing out now. I think there's a lot more to go, frankly, for this. And this can be short covering. And you'll see people talk about it's just short covering and it's not real. Guess what? It always starts out as short covering. So if you use that as a crutch, you're going to get yourself into some trouble. But I think we trade these things back at least to the 200-day moving average. I think it's got some firepower. And even if it's only short covering, it's going to make people sort of question their thesis by the time it's all said and done.
So many things are up so much. what would you lean into further if you really do believe that there's a lot more to go? Your words, certainly not mine.
Yeah, look, if you're tactical, we still think that there's beta. There is a massive convexity to beta right now, and that's going to continue to play itself out on the street. And I think that's got days and weeks to go. So tactically, I think it's beta. If you're looking for trends, and these are global, if you're looking for trends that got oversold but didn't crack the trends, believe it or not, with all this stress in the bond market, all the stress in equities, financials actually have held their own very, very well. So banks, international banks, all those look really, really good and still in long-term bullish uptrends. So if you're more structural, if you're thinking about now to the end of the year, I think financials. If you're thinking now to the end of the month, to end of the quarter, I think beta.
What about rates?
Good question. Short rates are saying the Fed probably comes in. They need to. I think that's probably right. And that's not because of what we're seeing necessarily from the markets itself. But if we look at the data and we look at the trajectory of what's happening, it looks to us like we'll probably have an upside surprise to the unemployment rate and some of the job figures this quarter. That should give the Fed some cover to be able to come in and lower rates. Neil Dutta has 4 rate cuts in our shop. I don't handle the rate cuts, but I would certainly agree with what the market's message is on that, and that there is room for rates to come in. The 10-year yield, a lot of resistance at 440. I know we poked our head through that this morning. We're down below that now, but I think this is actually a pretty good time to get long bonds if you're looking to reallocate portfolios. Certainly out of cash, I think long bonds make some sense here.
It's incredible, as I said to our guests already today, some of these moves, double and triple take. AMD up 24%, Micron up 19%, Broadcom 19%. Forget about NVIDIA, which is up 19%. Semis had gotten destroyed. There was a belief that what was first in, so to speak, could be first out. Does this take a longer-term relief off of that space?
I think it does. There were 2 sectors, industry groups, and in fact, semiconductors were the ones that flashed for us Monday, so that would be Friday's data. For the first time in a long, long time, really since 2022, our option frenzy work was showing a seller's frenzy in semiconductors. Now, believe me, it's not good enough to call it by the day or by even the week, but generally you're in the zone that you know that things have gotten bad. It was also happening for home builders and apparel names, so Nike was actually one that was on our list as well. So, from that standpoint, what it says to us is it was really a full repudiation of the AI, blue skies, can see a million miles in front of you type of thinking and narrative that was out there just, 6-9 months ago, and you reverse that. And for us, one of the keys, when we're going to look for a bottom is you have to be able to take out kind of those blue sky narratives of whatever it was, whether that was, switching, and today it's AI, whatever it was throughout the ages, and we were able to do that. And that really just happened last week. So that to us was an important milestone to say, hey, now they're taking out the narratives of what was really, really bullish, and that's a good setup. Are they going to be leaders? I don't think that they're leaders. I think they're massive rallies. I think they're part of that beta trade. They're probably exhibit A for that beta trade, but there's more to go there in our view.
It's extraordinary what's happening in the NASDAQ. It's up 12.3%. We've gone in a steady, thank you guys in the back, in the control room. We're showing it on the screen here. This intraday move in the NASDAQ is incredible. You tell me what's going through your mind here as you're watching this move with all of us, 12.5%?
Yeah, don't worry about the number. Worry about the price action. That is people absolutely scrambling because they're way too short beta. And it's a gamma trade, it's a convexity trade. All that's taking place, and it's going to continue to take place, I think, probably for the next at least 2 weeks. I think it's good news, not bad news. Now, we'll get to some resistance levels, and I think we have done damage to the trend. So I think there is still that we have to worry about. In the near term, between now and when you have me on next, we don't have to worry about it.
This is the second biggest percentage move ever for the NASDAQ. I'll try and confirm that, but from what I'm looking at right now, that's what it shows. And we'll see as things go into the close whether it in fact does become biggest. Jeff, thanks so much. We'll talk to you soon.
Thank you. You bet.
Jeff DeGraff. We're in the market zone now, of course. CNBC senior markets commentator Mike Santoli is here to break down these crucial moments of the trading day. Wow.
Yeah.
Wow.
Part of it is a lesson in kind of the physics of the market, the equal and opposite reactions. Jeff was just detailing a lot of it. I've been talking for days about sort of how historically washed out, oversold, the amount of liquidation that went on Friday, Monday, generally are the preconditions for something wild to the upside, almost like close your eyes and buy, or at least in the vicinity of that. So the magnitude of today's response, I think, owes everything to that. People were forced out, now they're forced back in. The other piece of it is, you mentioned the NASDAQ, we've never had a market where mega caps can fly and crash the way they do these days because of how they're traded. And so the S&P 500 is up 2 full percentage points more than its equal weighted version right now. So it is just this stampede into the same stuff that let us down, and that's now insulated the market just on a pure kind of read the tape basis from any idea that this is either a one-day fluke or just kind of, now it could be a dead cat. My point is the volume's so heavy, 97% of the volume to the upside at this magnitude of gains, it's at least going to make you say, fine. We've ratified that we have a short-term low. Now it's work from there to figure out where it can go.
It's just unbelievable that, we've literally had in what anybody would consider to be a good year for returns in a day.
Yeah, no, exactly.
The S&P 500's up almost 10%. The NASDAQ 12.6, as we said. The Russell almost 9. And the Russell, I mean, you talk about something that needed some relief.
Well, I mean, it was basically broken down this morning. It had gone down below its 2018 high this morning before bouncing. So the next steps, I do think, are, look, we're going to sober up a little bit. We're going to figure out what actually has changed relative to what we thought a week ago. The S&P 500 on the day that the president announced the reciprocal tariffs closed at 5670. It's still 200 points above where we are right now after an almost 10% pop. So it shows you just how we basically fell out of that old range all at once, very deeply. And so that's part of the explanation for what's happening here. Obviously, the bond market behaving a little bit better, and maybe the market also pulling out of all this an implied suggestion or signal that the administration will buckle when the market eventually sees enough pain. I mentioned this morning, the old line that markets panic till policymakers panic. You kind of got that. To the point even, where the president conceded that he was watching the market. So I don't think you could live off of that. You know what I mean? You still got to say, at a 10% global tariff, there's a $300 billion tax hike that just hit this economy, right? I mean, that's what happened mathematically. So you still don't know what it's going to mean for growth, what earnings season is going to look like. It really just wipes away the worst case tail scenario away.
Sure, but let's also remember and recall what happened on April 2nd, the president's so-called Liberation Day. Initially, the market thought it was 10% across the board, and stocks went up. There was going to be... Or
even 15. Yeah, you're right.
There was going to be a significant rally that, it's not as bad as we thought.
Right.
So if we're going back to the baseline of, well, it's not as bad as we thought, obviously China remains a significant wild card in that. At least the market can get through the psychology and get it in its head that, this is more of what we initially planned for, so we can be and deal, and we'll figure it out.
Yes, that's absolutely the hope. And by the way, we don't even know if the first Twitch rally on that headline that it was going to be 10 or 15% would have stuck. But I agree with that. And what you really should hope if you're an investor is that we get some clarity on the process that's underway. The market is good at monitoring and handicapping the outcomes of processes that they have some transparency toward, and you can see incremental information along the way. What the market's terrible at is figuring out what one human being is going to decide in the next hour, that's what this market tells you. That there was literally no way to get in front of this except if you wanted to read into what the president posted this morning.
A collapse in the VIX?
Yeah.
Midday as well.
Well, that's the thing,
VIX was at 50, now we're at 35.
It takes a lot to keep the VIX above 40 or so for 3 days in a row. And this is obviously the absolute crash scenario in the VIX that you want to see. And again, it confirms what I'm talking about the volume skew and all the rest. It's still 33.
Yeah, it's still 33.
But
it ain't 50.
But again, it's the same kind of a trade where where people are just getting chased out of the thing they just ran headlong into. So all that stuff, it's good. We're going to have an interesting time looking at all of the trading dynamics and where that brings us, because all it looks like is it sort of brought us back from the brink of something that was going to be pretty scary to just a scenario that is maybe nuanced, a little bit ambiguous, maybe not as great as we thought a month ago, but a whole lot better than we thought it was going to be 2 days ago.
Yeah, and 2 days from now, of course, we'll be talking about bank earnings. And they are getting significant. Yes, exactly. Let's just get back to the normal stuff.
Yeah, I really do think that the market wants that. One thing that earnings season usually brings is that stocks move on their own as opposed to just in one big school of fish, the way it does with its macro influence. And that's another thing that's going to allow volatility to come in if we manage to But for now, it feels like that low near 4,800 in the S&P is probably going to mean something for a while, unless you get some other bolt from the blue, policy-wise, or some other way. And like, we got to figure out, this is pretty serious with China. That may not be over in terms of the back and forth.
All right, thanks so much. That's Mike Santoli helping us really get inside this market dynamic today. This will end one of the most extraordinary days that any of us will certainly remember. We'll go out real big across the board into overtime with John.
An explosive rally for stocks after news President Trump is pausing reciprocal tariffs on countries that did not retaliate, but holding them at that baseline of 10%. China, the exception there. The Dow up nearly 3,000 points. S&P up 9.5%. NASDAQ up 12. Welcome to Closing Bell Overtime. I'm John Fort. Morgan Brennan is on assignment, and we've got a great lineup to navigate this historic market move after some historic market moves. And what comes next for your money? We've got Dan Niles, Fund Strats Tom Lee, John Kadunas from Colomos, and former Kansas City Fed President Thomas Honig, to name a few. We begin with the breaking news from the White House on the tariff pause that sparked this amazing rally. Eamon Javers joins us with the latest. Eamon?
Yeah, John, that's right. And we're getting, just within the past couple of seconds, our first details in writing here in terms of what the president has announced. A couple of bullet points sent to reporters on background here from the White House. They are saying that the reciprocal tariffs are paused for 90 days, except on China, as we knew, whose tariff rate has been increased to a total of 125%. The baseline tariff of 10% that went into effect on April 5th remains in place for everyone. Section 232 tariffs on steel, aluminum, autos, and et cetera, those remain unchanged. They're saying sectoral carve-outs in the reciprocal and baseline tariffs also unchanged. And this is important in terms of the impact on the EU. They're saying because the EU retaliatory tariffs have not gone into effect yet, the EU's reciprocal tariff rate of 20% is also being paused. So the EU is now only being tariffed at the 10% baseline that went into place on April 5th. That had been a point of confusion over the past hour or so. Fentanyl tariffs on Canada and Mexico, they say, remain unchanged. USMCA trade is tariff-free. Non-USMCA trade is tariffed at 25%, except for energy and potash, if you can follow all this, which is tariffed at 10%. Baseline of 10% did not go into effect on Canada and Mexico on April 5th, and neither country is getting the 10% baseline now. So those are our first details in writing from the White House in terms of what the president's decision was, and we've been working to understand the context of how he decided to do this. You heard the president on the South Lawn just a short time ago, John, saying that he was watching the bond market. He was watching markets overnight. He said he thought people in the market were getting a little bit yippy, and there was a little bit of anxiety in the markets. He said he watched Jamie Dimon on television today, and that's when he made the decision. According to Caroline Leavitt, the White House press secretary, he made that decision in the Oval Office a very short time before we saw the social media post that rocked the markets. We don't know, John, whether that decision came before or after the president posted on social media that now is a good time to buy the market. So we don't know if he had this in mind when he was posting that to the world, but we do know from Caroline Leavitt that he decided this in the Oval Office relatively short time before he shared the decision with the world. And now we have some of those details in writing. John, back over to you.
Wow. Okay. That's quite a timeline. Eamon Javers, thank you.
You bet.
Now let's bring in Dan Niles, Niles Investment Management founder. Dan, it's like we hit the rewind button to April 2nd, but before the president held up that confounding chart to a lot of people. And there were some headlines crossing where people thought this tariff rate was going to be at 10%, and it wasn't great, but there was a bit of a sigh of relief. S&P 5450, around the level where we closed today, takes us just a bit above the April 3rd lows after these tariffs were initially announced, and the S&P had dropped 4%. So are stocks more likely to do better from here now or worse?
Well, I think you can't fix all your positioning problems in a day. So I'll take you back to when Lehman Brothers failed, right? Back then, the government made a huge mistake as well. They let Lehman Brothers fail. The market was getting cratered. And then on October 28th, there was the expectations of rate cuts, and the S&P was up 10.8% in one day. It then gained another 6.9% over the next 5 trading days, before, of course, falling 25% to November 8th. So to some degree, this is like that, where you have a policy mistake, the market gets cratered, people figure it out, they've done it wrong, they fix it, it rallies. I think probably the two things I'm looking at is the S&P was near 5,700, I believe, before he held up that chart. That's probably near where the upside is. And I look at the VIX, and I go, the VIX was at about 22 on April 2nd. I think it peaked at 28, I want to say, like in March before that. And so if the VIX kind of gets down back to those levels, that's another data point I'd look at and say, okay, now we can go back to focusing on fundamentals. And to some extent, how markets react to JP Morgan, Wells Fargo, BlackRock on Friday morning, that'll give you another tell as to, where are we in this terms of repositioning trade versus going back to focusing on fundamentals.
And what about the credibility side of this? The administration have been saying we're looking at Main Street, not Wall Street, but we just heard that they said today that the president was looking at all these Wall Street indicators, the bond market, the stock market, what some bank titans were saying. The administration said this is not a negotiation, and now they're talking about how much they're negotiating and pausing to negotiate. Do you believe what they're saying?
Well, absolutely. Everybody's human, right? There's what you say, and then there's actually what you do. And my thing, you had me on an interview on Monday, and I talked about, I think getting out of all my shorts and covering all of that and getting short volatility. Because the one thing that happened, I believe, that day when the market got crushed on Monday morning and then kind of rallied was you got an idea of what a change in sentiment could do, where the market was down 4.7% at its worst. Then it was up 3.4% at its highest. And then it kind of came back in. But why did it do that? Because people thought that there was some chance of them backing off of tariffs. The other thing was it was becoming clear that Scott Bessent, who, don't forget, he worked with George Soros back in the day. He was involved with, the shorting of the yen, the shorting of the sterling. He knows how global markets work. He was being put in charge of the trade tariff negotiations with Japan. And so to me, that was a sign that President Trump was putting cooler heads in charge of the tariff policy, seeing what was going on with the stock market. And so that also gave me some hope that at some point cooler heads would prevail, and that's obviously what ended up happening. But I just want to be very clear about this. The problems that the stock market had before are still in existence, much like, yes, you got a 10.8% rally on October 28th of 2008, but the market kept going down. You still have high valuations. You're still going to have, you have tariffs. They're just not as high as they originally were. And that's inflationary. Earnings estimates have been going down for the S&P 500 since the middle of last year. 6 of the 7 Mag 7 had revenue estimates cut for the March quarter when they reported their December quarters. All those things are still there.
Well, that doesn't sound great. So does that mean cash is still your top pick here and people shouldn't jump back in the pool?
Well, as I said earlier, right, I think this continues for a little bit, but yes, I think the two levels are S&P getting back to where it was on April 2nd and the VIX kind of getting into that, mid-20s kind of range. And then you should start thinking about, should you really be paying 23 to 25 times trailing earnings when historically the right number is around 19 when you have inflation this high? And, it's hard to argue tariffs are going to make inflation go down anywhere in the near term. So it's a process. Bottoming is not a day. It's like a process. And you can't work through issues in short periods of time typically. And, the Fed's told us they're not planning on really stepping in here because they're trying to balance slowing growth with higher inflation. Luckily, we know where the Trump put is, quote unquote, down at these levels. But, eventually earnings are going to matter. And I don't like investing when earnings are going down.
Exactly a week ago was April 2nd. Kind of hard to believe. Dan Niles, thank you. Well, let's bring in CNBC senior markets commentator Mike Santoli with his take on today's wild action. There's been a lot of wild action, Mike.
Yeah, we just keep ramping it up, actually, in terms of wildness, John. You can see how it looks like a little needle on the end of this this chart here. Today's rally of almost 10%. Where did it bring us back to? What did it accomplish? Well, it did leap a couple of hurdles, or at least areas where you might have thought it would run into a little bit of trouble, maybe 1 or 2% below here. That would represent things like, the highs from late last week. But 56.70 is where we closed on that day 1 week ago when right before the reciprocal tariffs were announced. So still some upside there. What I also find interesting is this kind of equates to the previous intraday lows before we got the tariff announcements. Remember, at 5,500, I was sort of saying, well, it's going to take real tangible bad fundamental news to get us much below that. We got what we thought was bad fundamental news for a while. So look, it looks like that the lows can be trusted until further notice. That would be like around 4,800. We're figuring out where the top of the range is. Folks looking at some moving averages, 5,700, whatever it is. We're in this zone where it sort of has to start to prove it. Take a look here at the 30-year Treasury yield. This was where a lot of the dramatic action was overnight. This is a 2-year chart. You can see it still looks pretty spicy up there, around above 4.8%. You can see we've done that a couple of times. That's when it starts to unnerve other parts of the market. So we'll see. It obviously ended up well below that 474, but this could be twitchy for a little while. Russell 2000, I think, was fascinating, mostly in how far back in time it went. This is a chart that goes back to the end of 2016. This was the sort of tax cut rally under Trump 1, and we were basically at or below the 2018 highs in this index, believe it or not. So we did get a bit of a save there. Maybe that's the lower end of this this multi-year range.
Mike, remember back when some people thought that we were going to get more certainty on April 2nd? I wonder what all of this might mean for earnings guidance, because we start to kick off earnings season in just the next couple of days with the banks. There's this 90-day pause, exactly a quarter-long pause on these reciprocal tariff rates, but that probably doesn't help much for quarterly guidance or certainly what happens to full-year guidance.
It won't. I think it's much more telling how the market responds to that lack of clarity in the outlook by various companies. What we have done, we definitely haven't gained full certainty, but it seems like at least right now what you've done is sort of eliminate a potential worst case scenario that you really thought could get disorderly and ugly immediately in the world economy. And now it's more about just exactly where are we in terms of getting pinched around the edges with the tariffs that exist and all the rest of it. Also would note, even before the big rally, before the turn of policy by the president, you did see Walmart and Delta both rallying after their managements basically said, we don't have a ton of clarity about the outlook.
What a pop. I'll see you again in just a little bit, Mike Santoli. Meantime, we got more breaking news on tariffs. Let's get to our Megan Casella now with new details. Megan.
Hey, John, absolutely. Learning a little bit drip by drip from this White House. They just put out sort of a fact sheet on some of the details on these tariffs. And just to emphasize, there's been a lot of confusion over the past few hours about what exactly the rates would be on different trading partners. So now, with the fact sheet that we have, we can say that the European Union will get that 10% baseline rate that everybody else is getting for the duration, at least, of this 90-day pause. The EU had been at a 20% reciprocal rate. There had been a lot of questions about whether, because we saw some retaliation from the EU this morning, whether they would stick to that 20% rate. The White House confirming now that because that retaliation had not yet taken effect, they will also fall to the 10% baseline rate. Then we get to Canada and Mexico, and the White House official saying now that both of those countries will stay as is. So that means they get a 25% tariff rate. That's the one that's been in effect already over the fentanyl concerns. And the White House says now that USMCA goods will continue to remain exempt from any tariffs. And John, I'll just say we've been asking a lot of questions over the past couple of hours about Canada and Mexico specifically. And for the last 2 hours, no one could say exactly what the rate would be. The Treasury Secretary told reporters earlier, in fact, the opposite information, that the 10% baseline tariff would actually hit Canada and Mexico as well. So that just goes to show sort of the shotgun nature of all of this and how a lot of these details are being hammered out sort of in real time. The last thing I'll flag is that the sectoral tariffs do remain. So that means we continue to have a 25% tariff on all imports of steel, aluminum, and cars and car parts, and that the White House says the ones they've been talking about on pharmaceuticals, semiconductors, copper, and lumber, none of that changes. So a sigh of relief for the markets when these country-specific tariffs fall away, but much of what was already in place still remains. John?
All right. Yes, reiterating that. Thank you, Megan. Let's get back to the rally. The S&P 500 just had its best day since 2008. The NASDAQ posting its second best day ever. Let's bring in Fundstrat head of research and CNBC contributor Tom Lee. Tom, were you getting nervous here with what the market was doing? I know you expected things to go a lot better for the major indices this year.
Yeah. John, I was getting very nervous. I think the biggest sign was I was going to bed every night, checking futures, reading everything, and wondering if the market would open limit down. So I was getting very nervous. But of course, now this is a really big positive fundamental development.
So why aren't you still nervous, given the velocity at which things continue to change? How do you find signal in the noise? How encouraging is it that after saying that they weren't going to negotiate, the administration is now negotiating? After saying they weren't watching Wall Street's reaction, they really do seem to have been watching the market?
Yeah, I'm going to have to make some guesses here, but I think one of the positives is that I think the White House exercised the Navarro put, meaning they are now inserting Bessent more into the negotiating process, which I think is less of a hardline view. When I look at what this means for the next few months, I do think because of the tariffs and they've been dialed down, companies now have what's effectively probation. So if they cut guidance or they don't show guidance, markets can look through it because they know it's an adjustment process. So I think it's taking the pressure valve of investors panicking on earnings. I also think it's been really good news to see Tesla rally because, it's been our view that Tesla's more or less the exhibit A for what kind of bounce can ensue, because remember, Tesla got hit the hardest first, and actually it's been holding some important levels. And then I think there are things really, as we look towards the next few quarters or a few months, to be positive about, because there is the tax deal. And, at the end of the day, there was a lot of technical damage, but a lot got repaired. So, I do think this was an important day.
Apple popped 15% today to close just below 200 a share, but we still got those 125% tariffs on China, which is going to have an impact on Apple, but not just Apple, on a lot of companies. How do you factor that in as an investor now?
Well, yeah, the pressure valve has been released for basically the other 102 countries. In China, the pressure is intense. Obviously, these are ludicrous and absurd tariff rates that each country's imposed on each other. So I do think
yesterday, investors would have worried that these were permanent rates that were going to essentially lead to Apple's cash flows being choked off. Now I think investors realize there is time because it's a negotiating tactic. I think it's going to be a change in how markets interpret this, even though it is doing damage to companies.
So given that, where are you putting, how are you shifting, if at all, your money? Based on what you've seen before, is your strategy changing?
Well, before markets fell out of bed last week, our take was post-tariff liberation day, we'd want to stick with what we thought would work at this year, which is the financials, the industrials, and small caps. Those all got massacred. But now that we may actually have seen what could be, a bottom and possibly a V bottom, I think those are also going to lead. But the Mag 7, because they fell first, and as I said, Tesla is Exhibit A, I do think people need to actually have the Mag 7 in that mix as well.
Yeah, this was so quick, it's not even a V. It's like a needle bottom. Totally.
It's a Dongxing.
Oh, wow. Yeah. Quite a thing to see. Tom Lee, thank you.
Thank you.